can hear. Okay, so yeah, we're good to go. Everyone should be in here.
And anyone not here can DM me if you can't type in here. What channel are we typing in?
The live trading.
Oh, okay,
Re-
the live training chat.
yeah,
Okay.
regular live trading chat.
Stupid OBS. Let me. Give me 1 second. I'm gonna start streaming here. All right. Can everyone see this?
Yep, I can see it.
Yeah, all good. Okay. Well, let's get started here. Sorry for the setup. You can start recording, by the way. Okay, so this class we're going to specialize in day trading and what we've been doing every single day this whole year so far. And we're going to specifically go over TTF on what we're looking for. We're going to go over 5-minute signals, how we apply the orb, and how all three of it kind of works together. And we'll just kind of give you insights to like what I'm thinking when I'm taking trades and when I'm making callouts. It's a little different from just looking at signals, as I'm looking at other stuff too as well, but we'll try to get into all that as well. Okay, so first off, we need to make sure we're on the same page. Our trading view needs to be set up correctly, the indicators you're looking at. So we'll go over that first on trading view. So with trading view, we're mainly looking at just the MACD, the RSI, and the EMAs. Those are the three main ones that we use. We also have, there's a deal that comes up every Black Friday. Basically, it's about $217 per year if you buy it on Black Friday, the premium for TradingView. And it's normally $600 a year. You can also have up to 2 people on one account, so you can split it with someone. So we'll try to set up a channel on Wall Streets where you can find a partner to split it up with, and then one of you just pays for it, and you guys can just pay the other person off, and then we can all save some money doing that. I did not do that this year. I didn't know about it until this year, so I'll be splitting mine with someone else as well. All right. So in terms of just indicators, it's the normal MACD. I don't change any settings. RSI as well. It's just all defaults. So EMAs, I like to use this new one I found. It's 5 EMA by Selnatch 9. So Selnatch. So that one's really good because it includes 5 whole EMAs on one indicators. So if you're doing something like the free version, you're only allowed to use 2 indicators. The 5 EMA covers 5 whole EMAs, so you don't have to add one individually. And also left the list of all my indicators that I use. I really don't use anything except for these 3. And for the most part, for the most part, I don't even use the indicators. And I'll let you know why in a little bit. All right, so just the basics. 5-minute. The MACD is used to look at momentum. It shows you trend direction. It shows you how strong it is in a certain direction. This is how we hit 100% usually, or those larger percentages. Is when you're following the large trend and finding it, you can hit these larger percentages. And with RSI, it's just a relative strength index. It shows you where we're overbought and oversold. So anything over 70 is overbought. Anything under 30 is oversold. And we're looking at multiple different time frames as we're searching for the RSI. We're looking for a change in trend. So we are fighting trend when we're playing this. So that's what makes it a little bit dangerous. But there's ways to hit it directly without getting into too much trouble. And as far as EMAs goes, that's just the moving average. So difference between EMAs and SMAs is EMAs is going to be more weighted to the candles that are closing the closest. and we use it a lot for deriving true support resistances, not just standard support resistance that just stays in one position. So, for example, we hit 6,600 just yesterday on SPX. That is a major level. More than likely, it won't change too much dynamically. Maybe it'll go up to like 6605 or drop down to 6595. But for the most part, 6,600 is going to be a major level at this point. And then we can use all three of these together to figure out which direction the market's going to be in. Okay, so another thing that's important is when you're trying to take these day trades with us, you need to understand your brokerage fully. So like whenever we see you guys saying, "Oh, I didn't know Webull closed me out" or "Robinhood closed me out," this is stuff you should know before you even start trading money. That's why it's important to paper trade if you don't know what you're doing and figure out your brokerage. You need to learn how to set stops, trailing stops, any types of orders you're trying to do. If you're trying to sell options, you need to learn all that. Or at least know the very basics to follow along with us. So I personally, I use Thinkorswim, and you can set things up so everything's quicker and automatic. So every time I set an order, automatically I have it set for 10 contracts. And that's just for me. You can set this to whatever you want. If you're still practicing, I suggest you use maybe 4 contracts, and then just do market orders to get in real quick. You can do the same type of setup on all the other brokerages where you can do a template where it automatically buys a certain number of contracts for you once you put an order in. I know a lot of you use Webull and Robinhood. Fidelity has Active Trader. I don't really use that. I have Fidelity for a long port. I used Webull last year, but the fills were just terrible for me anyways. And compared to Thinkorswim, it was just completely awful. So we'll look at option chains on a couple of different popular brokers. So this is what the option chain looks like on Thinkorswim. If you can see here that I like to buy everything close strike, right? I want the most value for my money. So even though the contracts costs about, $80 to $120, I prefer that, getting 100% on that, than getting 300% on like 2 strikes out. To me, it means nothing. If you get 300% on 30 cents, I mean, what are you really making compared to me getting 100% on a $100 contract? It's not even close. Just do the math yourself. There's also an example of like an OCO order on Thinkorswim. Basically, what that means is when you put an order in, one will cancel the other once it executes. So if you're taking profits or setting a stop loss, once one of them hits, it cancels the whole order. So that's just like a quick way to get in and set your stops automatically all in one trade. I'm sure they have something similar on Webull and maybe Robinhood. I don't even know if Robinhood has it. I know Fidelity has it on an Active Trader, something similar at least. So here's Webull. This is how you can kind of set your contracts automatically. This one's targeting stocks, I believe, but there's one for options as well, where you can set how many contracts you want to buy when you first take an order. And here's the option chain on Webull. So pretty similar. I'm buying close strikes. I'm trying to get as much value. This is SPX, obviously, but on SPY, I'm trying to buy as close strikes as possible, and get the best value without paying too much or paying too little. I think this is Active Trader. So this is pretty similar as well. Look, targeting everything. This is Sophie, I believe. But so this is targeting, close strikes as well if I'm taking either calls or puts on either side. I think this one's Robinhood. So, I mean, I've never used this before. I just pulled a screenshot, but I was looking at if I were to take close strikes, that's what I would be targeting. Okay, so again, you need to know how to use your brokerage. You need to learn how to set stops so you don't lose as much as you should. I have a somewhat stop at 30%. Normally, if you go into the books that I recommend from Al Brooks, he tells you don't stop out until price action tells you to. So that could mean you take a bigger than a 30% loss, which I'm willing to take sometimes, as long as price action supports it. You can learn how to set trailing stops as you're already in the money and making money off of it. It just kind of keeps following it and trails it higher and higher, so you can keep making more money off of it. You need to learn how to take profits at the correct time as well. I mean, a lot of you don't know how to let your runners run, and you take profits too early, right? That happens to all of us. That happened to me all last year. So it's important to kind of figure out what level we're targeting, which I try to call out on live, and that way we can shoot for that level with our runner. But you can always stop out whenever you get uncomfortable. See, so again, yeah, it takes practice, and there's nothing wrong with paper trading. It's just a tool to help you learn, to get that muscle memory, to get in and get out quickly. All right, and another one to highlight is I do journal a lot. You see me, this is an example of what my journals look like when I'm trading. I usually just do it at the end of the day, but basically I'm going back through the log that I'm putting into Discord on my callouts, and I'm just putting them back into Excel and then creating like a Discord post out of it for the end of day stuff. So this is an example of what I do when I'm journaling. Yes, the trades do overlap sometimes, so sometimes you'll see like 200% shows up twice, right? This is the same trade. It's just the signals for that particular trade lines up where we had a 5-minute signal and an orb. So they're both showing that it'll hit 200%, or at least near there for each entry. But whenever I take a loss, I take a double loss. So it goes either way. So as far as news goes, I use Unusual Will's Twitter a lot. I find that to be extremely helpful. I use a lot of Bloomberg, AP News as well. I look for unbiased news. And the one that you need is True Social. You need Donald Trump likes to tweet certain things. And if you don't see it, you miss it. And a lot of times the market has moved heavily whenever he's tweeted stuff. And again, with the journaling, I find it's important. I think I covered everything as far as the basics go. Do you guys have any questions on that? As far as brokers go, I do find Webull and Robinhood to be the worst. They're basically just making as much money as possible on all your orders. Thinkorswim does it too, but to a lesser extent, which is why I get better fills usually. I'll try a new brokerage every once in a while just to see. Let me pull Venison real quick. And how?
We take one strike down. One strike out of the money for ODTs.
How? Oh my god. What is he doing?
I think Bowie uses Gex levels.
Yeah, I do
personally
use Dex and Gex levels. Okay, if we don't have any questions on this, we'll move on and Ben can take over to start TTF stuff.
All right, so deep dive into TTF. We're gonna do like a straight up 1 hour marathon here on everything TTF, top to bottom.
Do you need a stream?
Yeah, I'm gonna share screen.
Okay, I'm gonna turn mine off. All right, go ahead. I heard IBKR is pretty good. They just have stricter rules on how much money you need to have in your account. Sadid, I take as close to $100 as possible. Sometimes it's in the money, sometimes it's out of the money, but I take as close strike as possible.
All right, guys. So here we go. TTF, top to bottom. We can talk about brokers and all that little, side stuff. We don't want to, keep everyone too long for that stuff. So TTF. This is one of our main 3 day trading strategies, and this is what we do all day, every single day. The number one screen that I watch during the day looks exactly like what I have up right now. And what is this? This is Trading View split into 2, 4, 6, 8 screens. The 4 on the top is SPY, and the 4 on the top or on the bottom are Qs. broken into 1 minute, 2 minute, 3 minute, 5 minute time frames.
One second. Are you on readability?
Oh,
Change your stream. Click on the screen and switch it to readability. I don't think it is. Actually, it might be. Source 5 FPS. Oh, maybe
stream
we can read that
quality.
anyways because there's too many tiny screens.
Is that better?
I think it's good as it's gonna get. Yeah, it's fine.
Can everyone see it? Is it
Yeah,
legible?
Ben's talking.
Okay, everyone can hear me and it's legible. Okay. All right. So when I'm watching during the day, Chrono can't hear me, but everyone else can hear me.
Something with your side, Chronos. Do you have him muted or something?
Freaking Discord, man. All right, let me share it. Hold on. Well, yeah, okay. So I'm gonna blow up the chart. This is just the overall view. It looks small right now because the I have it zoomed out. So I'm gonna zoom back in. All right, so this is the overall chart. This is the overall screen that I look at. Then what I do, and why do I look at all these at once? Because this is what TTF is. This is multiple time frames. We have the 1 minute, the 3 minute, and the 5 minute. We're not in a TTF formation until the 1, 3, and the 5 all line up. So that's why I'm watching all three time frames at once. Once we know we're in a TTF, I can then eliminate the higher time frames because I know those already hit, and I can zoom into the time frame, the 1 minute that matters for entry and matters for re-entries. So what I'll do is we're assuming we're in TTF, which means SPY is now overbought or oversold on the 1, the 3, and the 5. So I'll blow up the 1 minute, right? So I eliminate the other two time frames because I know we're already where we need to be, and I go only on the 1 minute. Now we have to identify when we should start taking TTFs. There's a couple things that go into when we should get into it. So if you see over here, like there's 1 minutes over here, like we're overbought over here, we're overbought over here, etc., etc. Some of these aren't overbought on the 5 yet, so you would ignore them. That's why you have to have multiple time frames up. Because if the 1 minute's overbought but the 5 minute isn't, then we have to ignore that as an entry of it's not that's not an official TTF. So you can't go just based on the 1 minute. But if I know, for instance, up here, we're already at the 5 minute and we're already TTF, I don't need to have the other time frames up anymore because I know they're already overbought. So what we do is we have to look at some type of edge to help us identify when we should start taking puts. Because if it was easy as well, we're TTF, meaning we're overbought up to the 5 minute, let's just start slamming puts over and over and over. All this would basically be is like if the 5 minutes overbought or the 5 minutes oversold, just take puts or calls and good luck with that. That's not enough to to make someone money. Like there's other things that go into it. So what do I usually do? So once we're in TTF, I look for additional factors to then start to tell me what maybe might be a good reason to get in. The number one thing that I add on a on an intraday level is a trend line. So these lines right here, these upper trend lines, are what I do a lot all throughout the day. So as soon as it looks like a certain trend is being formed, I put in the trend line. So for instance, we're not TTF yet over here, even though we're 1 minute overbought and there's a little baby rejection. That would not have made us money on puts. So good, we didn't take it because it's not TTF. Now the market rips up again. Well, we're starting to get we're overbought again on the 1 minute, and we're probably overbought again here on the 5 minute. But I'm not just going to start slamming puts because the momentum is super strong and it's only the first tap of the 5 minute. So what I'm going to do is I'm going to wait and see if price action gives me any identification as to when the market might decide to drop. So what do we have here? We're going up, we're going up, we're going up. We have a huge pop. We have this drop right here, this rejection right here, which was this one candle. And I remember during the day, I was like, whoa, what the hell was that? Was there news or something? And then it hit the fifth, and this was not playable because basically what you would have had to have done is we would have had to have taken a blind TTF right here just because the 5 minute hit. And then you would have had to have made the decision to get out in under a minute on just this one candle because it wicked and it went right back up. So this was not playable. I wasn't in yet, but we had a solid rejection here. So what did I do? I said, let me start drawing in a trend line. So it started, the uptrend was over here. We rejected, we consolidated, we made another move up to over here, big rejection. We came all the way back up. So I said to myself, we are now TTF. If we come back up to this trend line, and now this is the second tap of TTF, I'm going to take it. Because the first one is always the riskiest. We say this every single day. The first tap is always, no matter what, the highest risk. So I said, I'm gonna skip like if this would have done this over here, that would have been super unfortunate because I was not in this one, and nor did I alert it because it was just the first tap. So I said, I'm going to let it do one tap. Let's hope it rejects but doesn't collapse and then comes back up for a second tap on the trend line, and that's the one that we'll take. So that's exactly what happened. So we had a trend formed, rejection here, and then we had been super trending for quite some time, for hours. And if everyone remembers, this was off the prior day super trend as well. And the other rule that we have is no two super trends in a row ever. I've never seen it. So basically, we were at like 250 on the second day, still maintaining somewhat of a super trend. So for me, either this was going to be the literal one exception in the 3 years I've been doing this, and it wasn't going to collapse, or it was going to hold true to the rule, and before the end of the day, it was going to collapse. So I was not willing to miss it. Whether it collapsed or not, I was in it because I thought there was a high enough probability that the IV was pretty solid. So I alerted everyone on Friday to literally get into the Q puts right up here. And we caught this entire move down. And again, that's because there was a trend line that had formed. We were near the end of the day, which we like anyway. We love end of day IV, V and Vs because those are the safest ones to take. And we were coming off of a former day super trend. So there was a lot of different factors going into why this IV was the one to alert and get in and not miss because there were so many different factors going into it. I like to string together at least 3 to 4 different factors when taking an IV. And that means not just going because the RSI tells me to. A one factor RSI or a one factor V or IV would be there's only RSI. There's nothing else going on. There's no trend going on. We're not coming off of a super trend. We haven't been going in one direction for quite some time. It's like we get a spike, the 5 minute gets overbought, we're TTF, and that's it. There's nothing else going for it. That would be the highest risk of all possible VIVs because there's nothing else supporting the move up or down. So I usually wait for multiple factors. Like this one right here was at least 3 because we had the trend, we had the TTF, and we had the super trend. The super trend and the trend line weren't there, then this would have been a much higher risk entry. But I was confident enough because we had all that going on. SPY really wasn't even as bad as Qs. If we switch this to Qs, so SPY had this was Thursday, right? All we did was go up. This was just pretty much pure super trend. We caught this IV here for like 40%, but other than that, all we did was go up. Everyone knows when all you do is go up one day, that's called a super trend, and you go into the next day with the bias of the opposite of the super trend. So the bias of Friday was that we were going to go down. So what happened? We We opened on Friday. We did go down, and we did take puts here. I believe. I believe on Friday we did take some slight YOLO puts, and these hit, but it wasn't the IV that I would say we were looking for. It wasn't the 100% plus IV that we would expect off of a super trend. But then there were other good options. There were other good opportunities on SPY that did off. I think we caught, maybe we caught this one, or this one might not have been 5 minute yet, but eventually it hit. If you go to Q's was even way worse. So Q's, we had a Thursday super trend because Q's did not go down at all. This was just pretty much an uptrend all day into the same thing on Friday, all day uptrend. But the beauty was all of this price action here, if you look at it, there was not a single TTF until all the way over here. So people always ask, should we get into puts yet? Or do you think the market's going to change? Or, are we going down? Are we up enough? Unless we're TTF, I really don't care how long we've been trending up. I will physically not take an attempt. And that's just that. Anyone who took attempts on any of this price action during the middle of the day here, you made zero money on puts. And why would I not have taken it? Because there were zero TTFs all day long over here. So from all the way over here, the bottom of this little baby IV, 3 hours later, all the way to over here, even with the market doing this rip and then the market doing this rip, there was still no entry because we were not TTF. So if you were slamming puts during the day, even just saying, okay, well, I think the market's up enough, right? I'm going to take puts here. Guess what? You lost every single attempt you made on any of these over here because we're not TTF yet. So you wait till TTF. So worst case scenario, right? We had this big up move on the market here. The first sign of any TTF was on this move right here. So let's say we jumped the gun a little bit and I said IV attempt number one in this general area. We get in somewhere around here. You get that one candle down. It's not enough for us to have made any money off of. So we stop out because we went all the way back up over here. Guess what? We re-entered TTF. We're back to being overbought. So this would have been attempt two up here, and the result would have been exactly the same. So we got in here, attempt one fails, we stop out over here, we re-enter over here, and instead of getting 300 or 400% on attempt one, so what? We get 300 or 400% on attempt two. And it's not only that, it's more money than attempt one because we're in for more money. So that's the importance of the attempt structure of VIV, because someone else would have said, go in big over here, right? This one fails. And now you have to make the decision because you're already down X amount of dollars. Do I want to try it again over here? And that would be a decision that if we didn't have the attempt structure, you would be questioning whether or not you should be getting in, or you'd be nervous because you're already down X amount of money. But if we go, you take a starter over here, we stop out, and then you take the double starter over here or the double attempt over here, you get the bigger move down. Again, it erases this loss, and then you take the bigger attempt here, you make way more money than you would have made even if it went over here. And you have to structure yourself to be able to do, I would say, a minimum of 3 to 4 attempts. So on any given day, you need to say to yourself, if I'm going in on attempt one over here, I need to make the assumption that attempt 1, 2, and possibly 3 will fail, and I'm going up to attempt 4, which is the one that'll eventually hit. Now, there's different ways that you can approach that. You can say, I'm going to skip attempt 1, which we've said many, many times, so that your attempt 1 is actually our attempt 2, and you can push that out as long as you want. You can skip attempt 1, you can skip attempt 2, and you can start your attempt 1 on our attempt 3. It's totally up to you on when you want to start. You can start on whatever attempt you want. The later the attempt you start, the safer the overall risk for you, because eventually it hits. And the worst we've ever seen was actually Q's these last 2 days. And the only lucky part about Q's over from Thursday and Friday was it didn't print us enough 5 minutes TTFs to get us in trouble. If this was ripping all day long, and there was a 5 minute signal here, there was a 5 minute signal here, there's a 5 minute signal here, and all of these missed, and the super trend was something more like that, instead of up and then down a little and then up and then down a little and then up and then down, so that the 5 minute was not overbought all day, we could very well have been in a situation where by 3 o'clock, instead of this being attempt 1 or 2, we were on attempt 4 or 5. And those are really the more risky days, because the higher the attempt we're on, the more money we're putting in, and the more money you're already down. But eventually, it still would have hit. So even even under the assumption that the trend for the day was just straight up, and we did print a 5 minute here, and another 5 minute here, and another 5 minute here, and this was attempt 4, guess what? It still would have hit and made us all a shit ton of money. So again, it really depends on you guys stretching your money out enough so that you're not ever going all in on your account by like attempt 2 or 3. It's just too much risk. So I usually do, and this is on the backdrop of a relatively large account. I do attempt 1 would be 500, attempt 2 would be 1,000, attempt 3 would be 2,000, etc., etc., etc. And the worst case scenario I've ever been in was, I think, attempt 5 or 6, and I was literally throwing, I think, like $16,000 on an ODT option, which was not the ideal scenario. It's not. I don't want anyone to ever be in that scenario. But the market being the market and being unpredictable, attempt 5 or 6 will happen again. If we do this every day of our lives and we're doing this 365 and this is our number one strategy, of course, eventually it's going to happen again. There is no avoiding it. So there's going to be a scenario in the future where we're all on an attempt 5 or an attempt 6, and it's like, well, shit, do I continue or do I stop? And the only way to avoid getting yourself into trouble is either one, again, start later, don't do attempt 1 or 2. So then you're only on attempt 3 by the time I'm on attempt 6, or you're on attempt 4 when I'm on attempt 6, or you just have to start smaller. Don't even start with 500, start with 150, start with 300, start with whatever you feel is best for you, but you have to be able to follow it, I would say, for at least 3 attempts. And because if you're getting scared out, like we had the other day where we were in the chat, and one of the newer guys, oh, sirens going on. Where there was a newer guy who, it was like 10:30 a.m. and the guy was already like, no more V's today, or no more IV attempts today. I don't remember who that was, but if you guys were in there and following the chat, someone was already saying no more for today. And I'm like, dude, it's literally 10:30 a.m. We're on attempt number 2, and you're saying no more for the day. That means you fucked up big time. Because the fact that we can only be an hour into the day, and on attempt 2, and you're already saying like this is too much, either you started too large or you started too early. One of the two have to be true. You cannot be you cannot find yourself in an attempt 2 situation and be like, I can't take any more for the day. Either your account is just physically too small and this isn't the strategy for you, or you went in too big on it or too early on an attempt 1, and now you're panicking because number 1 didn't work out and you're worried about what's going to happen the rest of the day. That just doesn't work for you. And for me, I don't care. I don't even start to really like even sit up in my chair until like attempt 3 or 4, because the money for me is just, it's nice. It's good extra bonus money, but like I'm not really risking any money until like attempt 3 or 4 when I'm on for like 2 grand or more. When an attempt 1 or 2 hits, yeah, I make like the 300% move that we got on Friday on the Qs, I think ended up making me like $1,200 on a 300% move, which is great extra money. But if we were on an attempt 4 and I was in for $8,000 and that went for 300%, I would have made like, that would have probably been a $6,000 trade. But that would have required me to have been able to stay in the trade until an attempt 3 or 4. So I don't really mind when the attempts go longer because for me it means the eventual hit is simply bigger. So according to this, the minimum account size I would recommend you need to stick with. I mean, because look, here's the thing. If I say the minimum account size is 5,000, it means you need to start smaller. So like you would, instead of starting at like $500 on attempt one, start with 250. If your account size is 10,000, you can start with maybe a 500. But it's totally up to you. And if the account is smaller, you just have to start smaller. If you have a really small account, like literally only have a couple $1,000s, like your attempt one should literally be like one contract. That's just the nature of life. Like I can't tell anyone take any given VIV alert with a $3,000 portfolio and that's going to be the one that goes 100%. It's just physically not possible. So I would say to someone who has a small account, start with one contract. Yeah, it might only be like a $100 contract, and we go for 30-40%, and you make 30 or $40, but that's better than nothing. And then you start with one contract, you have a small account, and attempt three hits, and you're in for now, instead of $100, you're up to 500 or $600. Then that one hits, and you make $300 or $400 on that one, and that's great. That's a solid amount. But to over risk yourself just because you want to get more money out of it is really the way you're going to end up losing your account. Because let's go over like a full super trend day, right? So like if we look at Qs here on Thursday, once again TTF saved us a shit ton of money on Qs on Thursday because look at what happened on Qs. Despite the fact that this was indeed a super trend day, which means there was no large drop throughout the day, look at TTF. We didn't have a single TTF alert. So I would not have taken puts. I didn't take puts at all on Qs on Thursday because there was no reason to do it. There were no TTF alerts. So despite the fact that all we did was go up on Thursday, there was no reason to be in puts. So you shouldn't have lost any money on Thursday. On SPY, I think it was a little different. Let's look at SPY. So SPY was tricky. So look at SPY. SPY was TTF at 10 a.m. and it proceeded to super trend the entire day. So this is essentially the nightmare scenario for TTF. Even though we didn't lose money on Thursday, I think we actually ended up hitting this IV here, which was enough to make us like 40%, which prevented us from losing money. But it was not the ideal day. So like for instance, right? At 10 a.m., SPY's already TTF. So I could say to people, look, it's 10 a.m. on a Thursday, a random Thursday. SPY is already TTF. Let's start taking attempts. So we take attempt number one somewhere over here. Obviously, it didn't hit, and the market went even higher. So we take attempt number two over here. This one didn't hit, or it kind of hit. Very small. Like if we got in over here and all the way down over here, maybe it was 20 or 30%, enough to at least get us out, break even. And then it went back up again. And then I think we took it again over here, and this was the one that got us about 40%, enough to reset the attempts, which was the blessing. Because if we don't even get enough to reset the attempts and break even, then now we're facing a situation where it's 11:30 in the morning. The market's still open for another 4 hours, and we're already on attempt three. That's like a nightmare scenario. That's the worst possible case scenario because if it's 11:30, we're on attempt number three, under the assumption this tiny little move here didn't hit, and the market did this, right? So like this didn't go down to here, it went down just to here and kept going. Well, guess what? It's now 11:30 in the morning, and we're on attempt three, and there's no sign of going down. By the time we get to 3 p.m., we would be on like attempt six if we start super early in the morning and the day happens to super trend. So anyone who said, you know what, I'm not going to take the sizing advice, I'm going to be a little bit risky today, I'm going to go in for like $1,000 over here on a smaller portfolio because typically it hits at attempt one or two and I'm just going to roll the dice. Well, guess what? You did $1,000 here, you're $2,000 here, and you're now at $4,000 at 11:30 in the morning on a super trend day. You just lost. There's no way. There's no physical way you can continue that pace. It's unsustainable. And now you have to make the decision: do you look all in your port on the next attempt that may not work, or do you take the loss for the day, rather than you're only in for 250, 500, maybe 1,000 here. This is the reason you cannot go all in or overcharge your entries earlier in the day, because it's simply too risky. Any given day, for any reason, can super trend, and there is no way to know. So for me, the way I've developed the strategy to avoid it is starting small and taking multiple attempts, because eventually it will hit. So again, this day was super trend, but it wasn't a devastating super trend that gave us no opportunity whatsoever to get out. Because this 40% here took us from attempt 3 back to attempt number 1. So we tried like another one over here, which gave us another 20%, and then the day just went flat and there were no more attempts. So despite the fact that this was super trend, if we were adhering to the strategy, we were able to get out without losing enough money to hurt us, or really any money at all, and then carry the super trend into the next day. Right? Super trend day, check. We have that already confirmed. Now we go into the next day. And there is no 2 super trend days in a row, which is the number one thing to remember off of the back of a prior super trend day. And look at what SPY did the very next day off the super trend. We had this massive IV here, which was barely really an IV, because the 5-minute only just barely tapped it for 1 minute and then collapsed. So this would have been like a super preliminary attempt 1, just because we had super trend, and I don't think we're going to go much higher, and we're barely overbought on the 5, and let's give it a shot, right? And it ended up working out. But guess what? SPY went right back to super trending. So it went from 11:50 to 3 o'clock straight up, off of the back of another prior super trend day. So to me, that said, the eventual IV is going to be a banger on this one, and I really don't want to miss it. That's why I was sitting there waiting all day long for this exact scenario. And everyone who was live with us on Friday, we all caught this at the exact top, and all made the minimum you could have made was 300%. Because I went for Qs, everyone else was in SPY and SPX that went for like 4 to 1,000%. That's because we were using the context of the prior day super trend, along with TTF, along with an uptrend, along with it was 3 o'clock going towards 3:30, and everyone who follows us knows the later in the day, the higher the risk of the eventual drop. We've seen this a million times, where the day just goes one direction for hours and hours and hours, or even a day and a half, and then all of a sudden, for no reason, market snaps and collapses. We've seen this literally 100 times. That's the strategy where big money is made, because we're confident enough that the market has gone far enough in TTF to eventually cause the turnaround that we're looking for. And let's even assume, worst case scenario, right? We started attempt 1 around this area, around 240, and the market didn't do this, and it did this, right? So we would have ended Friday on the back of another super trend, and then the market opens green on Monday. We're going to assume, this is Monday. We open somewhere in this area on Monday. Guess what? We go right back into looking for the IV. There's just no way that it's going to continue at that pace forever. So now, let's say, neither of these attempts worked. So we start Monday on an attempt number 3 as soon as we are TTF, right out the gate. If we're TTF at the gate, or we're TTF at 9:45 or 10 o'clock, whatever it is, we start the attempts and we keep the process going. So let's look at an example of when that worked out exactly as intended. This super trend into this, obviously not the IV we're looking for. Yes, did we scalp that for like 20-30%? Yeah, but if you're going to tell me a super trend day into the next day and the IV is only 20 or 30%, that would be a very big disappointment for me. The normal scenario that happens is this. Let's go find one of these days. So this is the normal scenario. We super trend from 10:45 a.m. all the way to 4 p.m. Right? So the market bottomed here. We got a TTFV all the way the rest of the day. Despite getting TTF on the other side, the IV never hit, and we finished the day on a super trend into a gap up the next day. So this is the number one ideal carryover scenario, right? Super trend end of day into gap up next day. So that essentially is a super trend carryover into the next day. As soon as we identify any level of TTF off of a super trend gap up, you take it. So the first even inkling of any type of TTF was right up here. And I had a resistance line there because look at pre-market. Pre-market high was right there. So off of a super trend into a gap up pre-market, identify pre-market high, which was this big wick right here, into a slight move down and then a rip into TTF, into resistance. IV is a go, no matter what, because the prior day had already super trended. Look at the size of this IV we got here. So that's why it's super important to not get discouraged if a day ends in a super trend. It's actually kind of good if a day ends in a super trend because the eventual IV that we're looking for is going to be really big and pay us a lot of money. But once again, if you don't give yourself the opportunity to survive into the break of the super trend because you started too big or too early, this strategy will not work for you. Because there is a 100% chance if we do this every single day, we will hit another super trend day. It's inevitable. So if you continue to outsize your risk out the beginning, you're going to find yourself in a day where we're on attempt 4 or 5 and you've blown your account. So could we go 2 or 3 weeks with not a single super trend? And it would have been like, well, if I would have put more money on attempt 1 or 2 every single time, I would have made an extra, $3,000 over the course of 2 weeks. Yes, we'll be in that scenario also, where we've seen TTF not miss past attempt 2 for like 3 weeks straight. And yeah, that is the unfortunate part. It's like, well, those are the days where you could have just put $1,000 out the gate on every single attempt and they all would have hit, but you do that one day of super trend and you blow your account. So that's just the nature of the market. It's like, why does this setup work 100% of the time for 2 weeks and then works like 0% of the time another, on the next day? It's just, that's how it goes. It's just, that's the way of the market. Or otherwise the market would be super ridiculously easy and every single one of us would be a billionaire because we would see the strategy, we would know to play it, we would just go in every time and it would never miss. That's why the market is difficult, because you never know what any given day is going to bring. So that pretty much covers the majority of TTF super trend, because that's really the risk, right? We don't have to do, we'll do a review of one day where it just hits nonstop. Like, look right here. So this is a day where market rips up, TTF, market rips down, TTF, market rips up. Like these are the days where there's just nothing to it. We go up, we TTF, we go down. We go down, we TTF, we go up. Like those are the days where we don't really have to review that because there's nothing to review. Everything hit. It hit on attempt number 1. There was no challenge. No one lost any money. We weren't even on an attempt 2 or 3. It just did exactly what we expected. And that's a beautiful day. These aren't the ones we really need to be worried about. These will be the smooth sailing days. The days we need to worry about are these. Look at this. Look at this bullshit, right? So like this is a terrible day. And this day I remember specifically because we had a Super Trend Thursday, which was from 10:15 a.m. all the way till 4 p.m. 5 hours of legitimate Super Trend. Every single attempt we lost money on. But look at what happened the next day. Super Trend into major gap up into TTF open into BAM. Caught this one too. I think this one did about 300% also. I remember that day. Right? So look at this. Super Trend up, gap up morning, TTF, monster gap down. So any amount of money we lost on this day, if you started the attempt on this day, made back everything lost that day plus more. But if you didn't give yourself the ability to carry attempts over into the next day and you could not take this, well, guess what? You're sitting there on the sideline. You've lost all your money this day, and this day would have just made it all back. So you could have said to yourself, I'm not going to do attempt 1 or 2, which would have been this general area early in the day. You start only in this general area. You would have ended the day maybe on attempt 3. You start with attempt 3 over here, and you would have made unbelievable money. But if you started with $1,000 at 11 in the morning, all the way on this TTF, and you tried to keep up all the way through here, you're on attempt number 7 going into here on a small account, you blew your account. But never ever have we seen this go like this, right? Does that, gaps up like this, that. This scenario has never happened in the history of me trading stocks. It has never happened. I think we would have to have some type of insane news for that ever to happen. But it did. We did get a super trend into a half day super trend or 2/3 super trend like we saw on Friday. Then it eventually fell. But that's possible. But 2 days in a row is not possible. I've never seen it. So maybe we'll see it in the future, but it hasn't happened yet. Okay, so that's TTF. That's everything there is to possibly know about TTF, and we will wrap that up, and we'll do a Q&A on that if anyone has questions. I'm going to do another quick, maybe 20 minutes on penny poppers and long-term investing, and then Bowie's going to take over. Okay,
They got a bunch of questions for you. You want me to read them out for you?
Okay, sure.
Okay, so Deed asked if you went over bearish divergence on RSI for TTF.
No, we did not go over bearish divergence. I've noticed sometimes it hits and sometimes it doesn't. Can you add it in to give you maybe a leg up? Yes, but there's also times where the divergence just literally means nothing. It's one of those hit or miss things. Like right over here. Like let's say you wanted to try and catch the V, the opposite, right? Instead of like you missed this IV, so you're like, well, shit, I missed this IV. I'm gonna try and catch the V. There was no bearish divergence here. The RSI continued to go down all the way until the very bottom, maybe a tiny bit over here, but look how deep we already are. Like this, we could have already tried multiple attempts here, and as it went lower, the RSI kept going lower. The divergence didn't hit until like all over here, this general area, which yeah, it definitely helped, but then you would have had to have skipped all of those, and a lot of times we see where the RSI bottoms, and that does represent the bottom. So RSI divergence, I don't have huge weighting in it, but yeah, RSI divergence helps a lot with like longer term trading. Like look right here, right? If you wanted to catch this IV here, there was no divergence. It went up, it hit the top, and it went down. So like if you were like, well, I'm only gonna take an IV because I'm gonna wait until there's divergence, and I think it's going to go up higher over here, but RSI will be lower. Well, guess what? You missed this whole IV. So it's one of those things like, does it help sometimes? Yes, but it also doesn't. It also sometimes doesn't help.
I think you should be able to identify divergence on RSI from the chart, but I don't think you should use it to trade. Take a trade based on divergence only.
Like, look, this one had no divergence whatsoever, right? Lower, 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 and then the V went. So there was no divergence. Wouldn't have done anything on any of this over here. It kept going lower. The RSI made a new low every time the market made a new low, and then it eventually made a massive V. So if you're like, I'm going to wait till divergence, there was no divergence, and then you missed the whole V. So okay, so that's that question. Anything next?
So they had some questions based on basically Heikinashi. So Red Rum said, just to be clear, we're overbought on the 1, 3, and 5 at this point, and when are you focused primarily on the 1 minute?
So I'm only focused on the 1 minute as far as blowing up my chart once all three other time frames have hit. So only I look at all three time frames simultaneously until they all line up, and then I zoom in on the 1 minute. Because you're not going to know if you're only looking at the 1 minute, you're not going to know if the 5 minute is overbought. And then if you're looking at only the 5 minute, you're not going to have a sharp enough entry based on the 5 minute, because the 1 minute is going to tell you to get in sooner than the 5 minute would. Lining up means the 1, the 3, and the 5 RSI are in the same spot, either overbought or oversold. You all three. That is the essential of what TTF is. It means triple time frame. All three time frames are lined up.
There's some questions regarding RSI. Someone asked, like, why does your RSI look smoother? And then someone asked about Heikinashi versus normal candles.
Okay, so my RSI looks smoother because I use Hikinashi. Hikinashi candles makes RSI trading smoother, in my personal opinion. If you're not using TTF or you're not using RSI, you don't need Hikinashi. Hikinashi, from my experience over the last 3 years of doing TTF, works smoother with TTF. That's really all there is to it. For instance, like, let's look at this day, right? Oh, it's going to reset me if I change the candles, I think. This is September 3rd. Yeah, stupid. Brings me all the way back. So, like, there's certain days where Heikinashi will alert us to a 5 minute TTF reversal that regular candles will not. And it's much more jagged. It just doesn't look as smooth to me versus Heikinashi, where it's not as jagged. There's more of these like smooth lines, and it hits TTF sooner than regular candles do. So you might miss. It's again a double edged sword. So Heikinashi is more sensitive to RSI on both directions. It'll alert us to a potential TTF that might go where otherwise we wouldn't have seen it, but also it'll have us trying attempts earlier on super trend days that regular candles would not have had us trying yet. So it goes both ways. I've just determined, based on my style and my trading, I like Heikinashi in conjunction with TTF better. That's all there is to that. Okay, that's a good question. Yeah. So when we're talking about attempts, you don't necessarily have to cut your prior attempts, but the problem is, if you don't cut your prior attempts and we're on an attempt like 3 or 4, your attempt 1 and 2 will be almost minus 90%. So you're basically risking losing the entire prior attempt by not cutting it. And if the eventual V or IV never goes and you've held all your prior attempts, you're taking massive losses on all the prior attempts. If you hold the prior attempts and we attempt 1 minus 70%, attempt 2 minus 50%, attempt 3, and then attempt 3 goes really big, you will make back all the money on attempt 1 and 2 and be green on attempt 3. So you'll be making more money. But the risk is, if it never goes, you're losing all of the money on every attempt. So every attempt is minus 90. Attempt 1 minus 90, attempt 2 minus 90, attempt 3 minus 90. then you have a lot of ground to make back up. So I can't tell you 100% certainty always cut it, because there's certainly been times where you'll cut in attempt one or two, and then attempt three does this right here, and you would have made back attempt one and two. But then there's also the scenario where attempt three hits for 40%, but it wasn't enough to make one and two go green, and then it goes back up, and now you're back deep red on one and two. So it's purely just a risk analysis. Do you want to risk holding attempt one and two and possibly losing everything on those, or do you want to be safer, cut attempt one and two, and then continue to try on the next attempts? I personally typically cut. So if we're on attempt one and I'm down about 30%, and it looks like we're breaking a double top and there's no real sign of any downward movement, I'll cut attempt one, then I'll try attempt two, I'll cut attempt two, and so on and so on and so on. The only problem with that is, like, if you cut an attempt one or two, and then it was a bull trap and it immediately goes back down, essentially you're rebuying the contracts you just cut at a slightly higher price, which never feels good. But as long as you're willing to re-enter, if we see the TTF finally hitting, yeah, you costed yourself a little bit of money, but I overall think it's safer.
Some people asked about contract sizing. So they're saying if you start with one contract, what point do you take profit? Someone asked about how big a portfolio you need for trading TTF.
As far as one contract goes, you can only take profit on one contract, obviously, when you feel it's the right time to do so. Ideally, you're on a portfolio eventually that allows you to start with more than one. I mean, look, realistically speaking, if you're doing two contracts, the largest, even if you're doing the minimum, which is one or two, typically speaking, an ODT is like $100, so you're in for like $200. Which, if you're doing two contracts, which is quite safe. If you're starting with $200, you can go to 2 to 4 to 8 to 12, to 1600, and you're only in for 1600 on attempt four. That's quite safe. Quite safe. You're not really getting into danger until we're on attempt five or six, and even then, let's say you have a $10,000 portfolio and you start with two contracts, you're on attempt five or six and you're in for like 3,600 to 4,000. You're not even in for, that's 30 or 40% of your report. It's risky, but you're not like, you haven't blown up your portfolio. Whereas if you start with, you have a $3,000 portfolio and you start with $500, you're only in for attempt one or two and you're already like ready to blow up your account.
Susan asked more details on entry and exits. Someone asked about RGR, GRG. Yeah, and then a question on
RGR
entry.
and RG are just simple red, green, red, and green, red, green. If the day starts one color, goes another color, it likely is retesting the original color. That's not necessarily related to TTF. That's just a pattern that I've learned over time, and we can combine it with TTF, but it's not. It's independent of TTF.
And you're talking about pre-market, right? If it were GRG, we're looking at pre-market is green, right?
Right. If whatever the market opens, like, so the market opens green throughout the day, we go from green to red. And it's not like the market opens 0.2% green and we go red. It's like if the market gaps up and we're open 0.4, 0.5, 0.6% down or up, and the market makes it all the way back to either flat or now the other color, and we're overbought or oversold off of starting deep green or deep red, the chance of it retesting the original color is very high. Yeah, and TTF for a V is the opposite of everything that we've discussed. The reason why I'm not going over TTF Vs is because the market's on crack cocaine and it doesn't go down. So there haven't been any really TTF Vs. For every like 5 days we try for IVs, there's like maybe one V. And even those like are very rare. It just doesn't really happen. It hasn't been happening at all. Eventually it will. If once the market calms down, we'll be doing Vs and IVs. All the big moves lately have been IVs because all the market does is go up.
I'll talk about these. I went through a couple of these. They're asking for like where do you take profit and what are your targets?
So yeah, so profit taking, if you have multiple contracts, we always take something off at the 50. And that means the 50 EMA, which is on my chart is the red line. Look at an example. These are all super trend, super trend. So right, so like this red line here on my chart is the 50, and look at how often the market reacts to the 50, right? All those wicks there on the 50, that's the 50, that's the 50. So the 50 EMA on the 1 minute is always profit target number one. So like if I was in with two contracts, I'm taking one contract off at the 50 and I'm waiting with the rest. If I'm in for four contracts, I'm taking two contracts off at the 50. If I'm in for eight contracts, maybe I'll take like three off at the 50. It doesn't always have to be half, but you want to start locking profits in at the 50. So in the event it reverses on us at the 50, worst case scenario, you break even. Maybe you'll get out with, some amount of profit. Worst case scenario, you break even, which is fine because all we're doing is waiting for the eventual bigger V or IV. And then once we're beyond the 50, profit taking really becomes up to you, because once we if any given V or IV breaks the 50, that typically means we're already upwards of 40%. We're approaching 50%, 60%, 70% uh beyond the 50. And at that point, like if you think I can tell if an IV or V breaking the 50 means it's going to go for 70% or 300%, other than if we're coming off of a super trend or something crazy, I am as honest as possible. I do not know if any regular run of the mill V or IV is going for 40%, 80%, 100%, or 200%. I do not know. It's up to you to peel contracts off as we go to certain levels. So you hit the 50, you take half. You go up from 40% at the 50 to 70% beyond the 50, you take another one off. You go from 70% up to 100%. We have an official bagger. You take another one off. There's just no way for me to say confidently, hold this one because you're going to make 400% on it. I do not know. The only way I ever catch 300 or 400%, like we saw on Friday, is because I went in with enough contracts that even if I'm taking one contract off every 50%, I still had some left over by the time I got down to 300%. That's the only way. Any other questions? Stop out is usually around 30%, maybe 35%, because it's apparent to us that any given V or IV, the attempt has failed. So we get in because the TTF is there and we see the market curling down and there was some level of trend or resistance. The IV or V looked good. We entered, and now it gave us like our initial like 10% move, but it started to bounce right back up. And now the market's ripping and we're breaking the double top or the double bottom, and it looks like the market's still strong. And now we're down 30 or 35%. You just have to stop out. Otherwise, you're going to hold it until you're down 50 or 60 or 70%, and then you have to decide what to do from there. But that being said, as soon as we get in or as soon as we stop out, we're already ready to start another attempt. You can't say, I'm going to stop out and I'm going to walk away and I'm going to wait an hour for the next attempt. Like we might stop out and literally 20 minutes later, the next V or IV is already ready to go. And then we're going to take the next attempt. Or we might stop out and the market's flat for 2 hours and there is no second attempt yet. There's just no way to know there either. But the risk is you don't stop out, like other people were saying, they hold all their attempts and the V or IV never comes. And now you're negative 80% on like three attempts, which is terrible. because you have to do so much work to make that back. Uh, Time frames lining up is super simple. Zooming out and looking at different time frames at the same time, and you're realizing that all three, the 5 minute over chart over here, the 3 minute chart over here, and the 1 minute chart over here all have the same RSI levels. That's all the TTF. That's the basis of TTF. Okay, so questions can keep rolling in. Well, for the sake of time, quick 30-minute long-term investing in penny poppers.
Do you want to do that then? I'll continue TTF from here.
Okay, yeah, go ahead.
Okay. Second. Okay, can you all see? Let's see. Okay, perfect. So, all right. So, I do look at TTF differently than Ben does. For me, TTF is only based on the 5 and up. I don't care about the 1, 2, 3, or 2 or 3. I only care about the 5-minute time frame and up. And basically, what I'm doing is I'm looking for probability to find whenever we have a chance to either keep pushing up or down off the RSI, either up to 70 or to 30. So, for example, if I want to look at the most simple example of TTF, I'm gonna look at, say, Wednesday here. So here an example as a TTF is its most basic form, and this is actually for calls. So if we're looking for TTF, right, we're looking at the 5-minute, we're looking at Heikin-Ashi candles. And the big difference between Heikin-Ashi and regular candles is it makes the RSI more exaggerated. The difference between the two types of candles is Heikin-Ashi is a trend candle. It's showing you the trend where it's going up and it's where it's going down. It's trying to make it clear for you. It's only taking the tops and bottoms and not really accounting for the middle levels of the candles. So it does exaggerate everything. So you can see how we are in TTF on the 5-minute on SPY here, and this was on Wednesday. You can see how we tapped slightly on 30 and then immediately went back up there. It did hit TTF there. And then once I identify TTF on the 5-minute on SPY, I'm going to look at the other indexes. And then you can see here that Q's didn't quite hit in the same level. Q's was a little bit off. Q's was kind of holding up in the middle, and then eventually later it did hit TTF on the downside. IWM lines up with SPY. It hit pretty much at 1020 here, down on the 5-minute. So once I've established SPY and IWM are in the same type of time frame on the 5 minutes hitting TTF, I can look at the 15-minute next. And basically what I'm looking for is what is the probability of us closing the gap down to 30 to cover this gap, in which in this case it's huge. The gap here is like 20 points. There's no way this is going to hit without a lot more selling the rest of the day. And then in hindsight, you can see we do sell off the rest of the day and we finally hit TTF down here, right? But we don't know that when we're looking at these. We only can see what we're given at the time. And this is telling us that there's plenty of room here for us to make some type of move back up on the call side here based off the 5-minute SPY here, right? Because there's a large gap on the 15, no chance of us to hit it. And as a general rule, if it's not within 5 points of 70 and 30, I don't consider it a possibility to even hit. And that's just a general rule. It's not always true. Sometimes we can just keep super training and it'll sell off completely. So here, right, if this was down on the 15-minute, closer to say like 34, 33, I would say yes, we have a better chance of covering this gap down and to keep selling off. So I'm not going to look for upside yet. But because this gap is so large, I'm willing to take a chance to play some calls here at some point within this 5-minute time frame. And then we saw IWM matched up with SPY, so we can look at IWM on the 15-minute time frame. And again, there's this large gap here. This is like 46 or so. So we're 16, 17 points off from 30. So again, no chance here. So for me, on this 10-20 type of time frame, I can start looking at the 1 minute for an entry based on price action. And here you can see, here's 1020. Go back to SPY here. Here's 1020. And it just so happens that we do get some type of double bottom here that's a bit skewed. But I did draw this level off when we were trading this. We did take this trade. We took an entry here and then, got, I don't know, 15% or so. And then we doubled bottom back down. And then I took another add here to go back to full position if I took something off here. And then we ran it to here and then took that off. And we got like 30-40%. Okay, that's an example of calls that work in TTF. Yes, the market has been super trading like crazy, and we've gone nothing but up, but you can still make money on both sides here. And again, we can look at another at the end of the day too. The one we just mentioned where we did hit TTF on the 15-minute on the downside. So here you can see, right? We tapped it a couple of times. We hit it here. We hit it here, and then we hit it here in the day. So there's 3 separate points where we could potentially get TTF there. That's just on the 5-minute. So if we look at the 15-minute, right? You can see here we clearly hit TTF here, right? Right at 215. So we can look at the other indexes, see if they follow suit. So yes, Q's eventually followed suit from its range trading and then sold off. So we ended up hitting on the 15-minute as well on Q's. And then on IWM, it didn't hit, right? We had to look at the 5-minute IWM. And we can see that on the 5-minute, we did hit end of day here, right at the same time frame, 235. We hit a low point. So at this point, I would base TTF based on IWM on the 5-minute because there's a large enough gap here. You can see the gap here on the 15-minute. It's about 6.5 points away or so, about 6 points away. So again, if it's not within that plus or minus 5, I don't think we have a chance to sell on. And another thing to look at is we have to look at the time frame of the day. We are already at the end of the day here on Wednesday. So what's the chances of us selling off enough to hit 30 on the TTF? If it's already 6 and not lower than that, maybe if it was like 34, I'd say we might have a chance to sell off real quick. But because it's 6 and above 5, so in that case, I'm looking at 35. It has to be below 35 for me to say there's a chance and probability of us to sell down. I don't see that here because it's at least 6 here. So here I'm looking for a turnaround on the 5-minute TTF, right? That's where I'm looking here. And then on terms of SPY, we see it hit multiple times on the 5 minutes. So we look at the 15, and we can just so happens that the 15-minute is the one that taps here as well in the same place, about 215, a little bit earlier than the other one. We can look at 30 minutes to see what the next time frame is. And we see, look, another large gap here on the 30-minute. So here, this is 10.5 points away from 30. So again, this is much too large of a gap to cover with the little time we have left in the day. So for me, I'm going to base this off of SPY 15 minutes. I'm going to base it off of Q's 15 minutes. And I'm going to base this off of 5-minute IWM. Okay, so in that time frame, I am looking for a place to turn around and where I'm going to look at the 1-minute in this little area. This whole area, right? This is another double bottom that occurred here before going higher. So yeah, you can take an entry here. I would have taken my entry here. I'm pretty sure I did that day. And then you can take an add-on here when it comes back down. And then just ride this back up. You can cut some profit here. If here we tap to 50, right? You can cut at least half here. If you want to keep holding the contracts down, or you can sell it off while it's still up like 10, 15, 10, even 5%, and then just take another re-entry here and then ride this up. Some of you are asking about, is it better to sell off your contracts or to keep adding on? To me, the always answer is always going to be cut your contracts. Even like sell while you're still positive and then take another re-entry if you have the capital to keep taking entries. Because I've done it on live before in front of you, right? I showed you guys where maybe we're chasing a TTF. I took an entry, didn't work out. Instead of cutting, I just added on, and it just got worse and worse. And yes, finally on TTF3 we hit, but at this point, as I averaged in, even though it goes back up here, I'm only up like 20, 30%. If you took it from down here to catch all the way up here, this would have been like 50%. So averaging in really sucks for TTF, right? Because you don't know at what point the TTF is going to hit. For the most part, we have some type of idea, right? Because we're playing probability, but we don't know the exact ones. We are getting more and more accurate with TTF and catching like TTF 1 or 2 at most times, but we do have some days where maybe we kind of zone in and just keep taking attempts. That has happened to me multiple times. Maybe not to Ben, but it has happened to me sometimes when maybe I'm not fully checked into the market and I just keep taking attempts because I'm just following strategy. And once I start it, I have to keep going, or at least find the best point of entry here. So these are the most basic examples of TTF, not including super trend. If you want to talk about super trend, right? Let's talk about Friday, because Friday was the culmination of what happened this entire week, right? So here's from Monday, and we did nothing but pretty much go up all day, right? Uh, Tuesday, we did go down. We had a little dip in the market right here, right? In this little area. And this is from the EU bonds, right? This is from international news that kind of dragged the market a little bit. But at the end of the day, with market dynamics, we should always go back up because that's how the market's supported right now. But besides that, we're mainly just going up every single day, right? Except for maybe like a little bit on Wednesday, we had a little bit of a downtrend. But for the most part, like Thursday, super trend up. Friday, we had more upside above our already all-time highs, right? So here, this was difficult to track TTF, right? Looking at the 5 minute, yeah, we didn't hit it. But if you look at the other time frames, like the 15 minute, let's look at the TTF here on Heikinashi. You can see how we hit the upside multiple times, and then the longer time frames was grossly already overbought, right? So on Thursday, whenever I started seeing the longer time frames already overbought in pre-market here, I could call that this was going to super trend, right? Even though I missed my entry on it, this was obvious from the start at the beginning on the day of Thursday, because you can see every single time frame, right? We were just grossly overbought, and it just keeps going. So whenever longer time frames start showing that there's small gaps to fill, um, I'd have to replay a lot of hours to show you this. But you can see like on the hourly 4 hour, we're chasing a TTF to actually get to the upside here. It was actually like 67 to like 69 on the upper end, and there was just small gaps to fill, but it just takes a long time because the longer time frame you have, the longer it takes for that candle to fill up, no matter how small that little gap might be. uh like a 3 point gap on the 4 hour can take 8 hours to fill up. Let's see, someone also asked, let me see chat. No, we haven't gone over orb yet. We'll go over a 5 minute here right after as well. And also in terms of scaling for TTF, I would say at minimum you should at least play two contracts, because if you can't scale out, I mean, you're basically just have to take, 15-20% and get out. Like, you don't know where it's going, you just kind of have to take your profit and go. Qs and IWM are relevant because these are all indexes. They line up in certain ways. Sometimes when one index touches TTF, the rest of them follow direction. So even though you have all three indexes line up together sometimes in the same direction, it doesn't make it stronger. Just from experience, even though everything lines up, it doesn't really mean anything. It's great when it lines up because we have to look at less stuff, but for the most part, one index can turn everything. I mean, everything might be headed for like TTF on the upside, but if SPY hits it first, we can get immediately downside before Qs and IWM hits it. I mean, depending on what we're playing. So, for example, this past week I played IWM a few times, right? IWM, I had the right idea. I would have caught the downside, right? I had an entry here. I just wasn't patient enough and to let this run. I ended up taking a loss on this instead of an actual win. And same thing, I don't remember what other day I played, but I believe it was like this day. I took an entry here and it would have ran, but I wasn't patient enough to hold it, and I just took the loss instead. So IWM, the differences between SPY and Qs is IWM moves more wildly than SPYs and Qs. You have to give yourself a much larger window of a sell down or drawdown, just like SPX. It moves whenever anything moves wild on the spreads, that you really have to let it run. Like minus 50% is usually my stop on IWM and SPX. And even then, when I cut out of IWM, I was only down like 40, 45%. I was never down 50, I don't believe. So I should have just stuck with it. It's just lack of. I haven't played IWM in a while. It's just not something we play much of anymore. Also, in terms of super trend here, right? We super trended all the way up to a certain point, right? A culmination for this drawdown that we caught on Friday, right? This was a point that we are all looking at. Um, at least I was. I was trying to call this out to you guys that this was where we were heading, right? I was looking for this touch on 6,600. And I wanted to verify this before I got in. So yes, you can take an entry here, but I don't know that it's not gonna reject very slightly off the 9 and then head back up and then break up and then retest and keep going higher, right? I don't know that. We've had SPY just completely rip off end of day a lot of these past few days. So to me, I really wanted to verify this before I jumped into puts, right? So I got in a little slightly late, but I knew this was going to be a big move at this point, just because of the specific level, right? 6,600 is a major level. It's a major gamma level. There's lots of resistance in this area, so this is not, you know, nothing, nothing unusual here. This is expected selling from this level, especially on a Friday, especially at specific levels. Red strip. This purple, you mean? This purple is orbs on SPY. So we're at.
Uh-oh. Bowie got disconnected.
Oh, sorry about that. I hotkeyed something. Yeah, purple. So that's orb, and we'll talk about that in just a second. No, I don't use indicators for it. Just draw it out. Oh. Let's see. 1 second. Someone got kicked out of here. Any other questions just based on TTF? I think we covered pretty much everything on TTF. So those levels on SPX are calculated. Let me get this guy back in here. All right, Bliss is back. Yeah, so SPX, these are quantitative levels that are calculated based on EMAs, SMAs, DEX and GEX, VWAP, and they're based mainly on the daily. So if you're looking at these every single day, there's a new point of data from each one of these, right? So I get a point of data from 9, 21, 50, 100, 200. I look at the 330 as well, and I put it into a formula to recalculate out and look at new levels every day. That's not something we're teaching here today, though, or ever. Look up quantitative analysis. You take the course from MIT if you want to learn about it. Specifically, why I'm looking at the 5, 15, and 30. I just don't see any reason to look at the 1 and 3. If the 5 is in TTF, I mean, there's too much noise on the 1 minute. The 1 minute can hit TTF a bunch of times, which is I'm trying to eliminate noise. I'd rather look at other time frames. So a lot of times you're going to see me trading orb 5 minute signal. I'm looking at the 5, 15, 30 hourly. To me, it's just too much noise to look at. I'm already looking at so many time frames on multiple indexes. I don't want to add more to it. I want to eliminate anything I can.
The one really only comes in handy on
Entry and
re-entry.
exits.
Yeah, entry and exits on subsequent attempts. So let's say we take attempt 1 TTF and attempt 1 TTF fails. I won't re-enter on an attempt 2 until the 1 minute re-enters TTF. So that's kind of what I use the 1 minute for. Because yeah, as Bowie said, if the 5 is overbought or oversold initially, the 1 is inherently overbought or oversold as a result. But if the attempt fails and you want to know when to re-enter on a possible attempt number 2, I won't do it until the 1 and the 3. If they fell out of TTF but the 5 didn't, I won't re-enter on a new attempt until the 1 and the 3 re-enter TTF. So that's why I use the 1 and the 3. Because it
And you,
saves you from having to go in on an attempt early, and then now you're on. You're doing 5 attempts in like 10 minutes. That obviously
right.
is not good.
Any other questions on TTF? If not, I'm going to move on to 5-minute signals, and we'll go over orb and how everything kind of works together here.
Or just write down your questions, guys, and we'll circle back as you're thinking.
Yeah, we'll circle back.
Yes, anyone who's here will get full recording.
Yeah, that's fine. Okay, so let's move on to 5-minute here. So 5-minute signal here is the purpose of the 5-minute signal here is we're looking for these long trends and trying to catch the full move for these 100% plus plays. If TTF is used to find the tops and bottoms of intraday, then 5-minute signals is trying to catch the big trend, right? So in order to look at 5 minutes, we'll look at the MACD for this. So MACD is for 5-minute signals, RSI is for TTF. So on MACD, nothing changes. We use the regular indicators. And what I'm trying to do is find the long trend by seeing if the signal confirms and establishes an actual trend. So here at the very beginning of the day on Friday, right, you can see how there's a red signal here, right? So the first signal is going to be the crossover on the EMAs. The second one is going to be a confirmation for me. So at this point, I'm going to be looking at the orb. I'm going to be looking at price action to see whether this is an actual confirmation. And here at right at 8:40, right, the very first 10 minutes here, you can see how it catches near the bottom of the orb here. It establishes the base of the orb down here. So I really want to see it break below the orb before I take any type of entry on 5-minute signal. So even if I get a 5-minute signal, say like here, right? I want it to establish down here and push down with the orb before even taking any type of entrance. I do never want to take any type of entry in the middle of the orb, because here is where you can get down to the bottom of the orb and just bounce, or you get to the top and just bounce. So I never want to be put in that situation. I rather wait for momentum to come and hit, and then I'll take entries on the outside of it. So as far as 5 minutes go, you can use it for two purposes. One's going to be establishing the trend where you can catch those big percentages, and the other is going to help you determine whether or if we're in range. So if we're in range, right, we're just going to be like this most of the day, stuck in like this dollar little range right here, right? This is not something you really want to trade. On Friday, I did trade this a bit just because I was bored. I basically traded it from like here to here a bit, 3 different times. Because it was bouncing off the orb, and plus I had a channel drawn out that I knew was going to hit for the most part. So for the most part, you don't want to range trade. You can kind of just ignore this and wait for a longer trend. So here, on a 5-minute signal here, right, you can see how there's a fake out here, there's a fake out here, there's a fake out here. There's so many fake outs, right? Once it's giving you a sell signal and it bounces the other way, this is telling you there's a fake out, and that means there's probably range to be had. Here, right, we got to the top here above the orb. Yes, we didn't have a lower orb breakout, but it was very tiny. And here you can tell like this is a bit of a fake out, because once it gave you a 5-minute signal, immediately it sells back off with this big candle here, right? So again, it got to the bottom here to like the middle of the orb, and it gave a sell signal here, and immediately just goes back up. So here, as you can see, fake out, fake out, fake out, fake out. Here we get like a minor signal on a 5-minute that actually hits, right? You probably only catch like 10% if you bought this. So not something I really want to play. I'll play the orb, but I don't really want to play this as a 5-minute signal here yet, right? You don't really get a clear 5-minute signal here until maybe like a part of this little sell-off here. This is about 10:20. This is the signal candle here. So we can look at it on the 1 minute. So here's 10:20. This is where we get the orb signal. And here you can see that we start getting some type of price action that can tell us that maybe we got some more downside, right? As we get this signal and we start getting back into the orb, you can see how all of these EMAs start lining up together, right? This starts becoming a resistance above once we break down and reject off the 50 here and down below the 200. You can see how there's a much better chance that we can move down more, right? So just looking at price action, that's where we need to look for entries here. Let's see, 5 minutes. Okay, so we had caught that little dip down of 5 minutes. That was fine. And here we finally get another 5-minute signal. So this signal, was solid the whole entire time, right? And it was in range for quite a bit of it. So here usually you'll see a little bit of breakout, you'll see consolidation, and then we'll see a higher move up. So pretty early on, I saw this trend start to form, and it did start channeling in a great direction. So usually, once I see it bounce off the orb a couple of times, I can draw a channel. I usually don't draw these out because I can already see it myself. This is just usually for you guys to get a visualization.
Bowie, they're asking what
Yeah.
orb even is.
We'll go over that next. Orb is just an opening range that we're playing. It's a momentum type of pattern that we're looking for. All these patterns are for momentum. So anytime we have range, it kills all three of our strategies. All right, so for the most part, we did get the original signals here. So if you just buy calls here, right, and you see how it just stays above the orb, you can just hold this position pretty much the whole time and eventually catch this move up with a little bit of patience. This was a very slow move up on Friday. I think even catching it after playing this multiple times and selling it off, and I played it here, I played it here, and then on my third time playing this, right, I bought a little bit more contracts. I see that it's starting to break the previous highs here, and then we start moving up here. Eventually at the top, though, I get about 70% here. It's not that great. This is a very slow move up. Data starts killing your contracts a bit. And then we hit that target we're looking for, 6,600 at the top here. So eventually, that's where my sell point was, because that was my target the whole day that I called out for live. And then you can see here how after we start selling off a little bit, we get another 5-minute signal here, right? We are already in puts here for TTF here. And then we take another entry here for orb, which we'll talk about in a second, which actually lines up with the 5-minute signal. So all three of our strategies lined up on this last play for the downside here that we've been looking for all week. So if you look here just based on 5-minute signal, this is at 215. And 215 just so happens to line up with the orb here. So this is 215. You can see there's a little bit of consolidation here. Looking at the EMAs, you can see, again, we have everything just sitting right here in a bundle, right? So showing you lots of resistance above to go back lower. And eventually it does go back lower on a much larger trend, right? This ran 200% from the top. I believe it ran still like 150% just off the orb by itself. So that is how 5-minute signals work. We're looking for the large trends to catch the large moves up and down. So again, if you can look past all the fake outs, if you can establish a range is happening and not get sucked into it, and you just catch the best moves, then yeah, the 5-minute signal is great. If you see this past week, my 5-minute signals have been really good. I haven't been caught in any of these range trades. And if I did, it was because I traded range on purpose. Let's see. Any questions regarding 5-minute signal? So it's when it switches. Yeah, whenever that MACD switches colors, that's a 5-minute signal. If you guys haven't noticed yet, all these indicators, right? These are based on EMAs. So if all EMAs are lagging, these are all lagging. So you should take note of that. Just trading indicators. Honestly, these strategies are just a framework for you guys, so you have something to look at. Until you guys actually read the books that I gave you on Al Brooks, you will not have a good grasp on what direction the market is moving. If you cannot read these candles, if you can't read volume, I mean, your best bet is just to look at, hey, is this turning red or green? Are we above 70? Are we below 30? I mean, that's what you have to resort to if you don't read the books. It depends on how serious you want to take your trading. Yeah, 5 minute, I mean, has been around for a while. Ever since I met Dog, he's the one that said, hey, look at the 5 minute on the MACD. But he never really like gave me a good reason why, right? It's how you read it and how you interpret it. And everything is going to be based back on the price action. Learning how to read price action is key for any of these three strategies, for entry, for exits. How do you know if it's a fake out? The fake out is showing you here. So we're going to see some fake outs on Monday. We're definitely going to see some range trading on Monday because of FOMC on Wednesday. And you're going to see here, once you get a 5 minute signal here, right? And then it goes the opposite. So this is telling you there's a put signal. So you should be selling down if this was a real signal, right? But because of the fake out, immediately it comes all the way back up. So that's how you tell it's a fake out. And that tells you that we're in potential range. Is Loop in this? I don't see his name on the list.
I added him.
Did he message you before?
He put it in the chat that he got kicked out.
Yeah, but is he actually in the class though?
Oh, that I don't
He's not
know.
on my list. I don't think he paid for this class. I don't know who that is.
A little sneaker.
When to take profit and orb and stop out, or is it the same? Okay, so let's talk about the orb here. So in reference to orb here, I usually just play the first 15 minutes of the day. So here's my first 15 minutes of the day. So you can see here, this is the first 15-minute candles. I look at the highs and lows of it, and then I create a range around it. And what I'm looking for is momentum to break out of it. And I'll play the upside, I'll play the downside. And then I will play a second orb. This one will start at 1:30 Central Time for me. Basically, I'm looking for end of day momentum, right? So usually the beginning of the day and the end of the day is going to have the most momentum. Are those your win rates on Orb? Yeah, Orb is excellent this year. Orb is a very old strategy that has been around for a long time, and this year it's just been working better than ever because there's a momentum trading going on. Trump brings a lot of volatility to the market. More volatility we get, the better our strategies work. Let me verify if he's actually in this class. So I don't know who this guy is. He's not on my list. He never DM'd me. Or just pull him back in, I guess.
Yeah, pull him in. He said he has the just DM one of us, Infinite, please. DM either one of us.
Okay, so 5 minute signal, right? The reason why I start my second orb, um, and this is a 10-minute orb in the day. The first one's usually a 15, but that can change. So if price action is stale and we're in range, I can always extend it to like a 30-minute, and an hourly, it's fine as well. So here, actually, like if you extended this 15-minute orb out to hourly, right? What this does is keep you out of this chop, right? You will not play this garbage little moves until over here, right? This is when you'd actually get in and you probably get like 50% here. It keep you out of, you can play this a little bit. I mean, it keep you out of anything else. So the longer the time frame, the better it is. Um, so for me, I kind of kept it here and I did play this a little bit and I played this garbage a little bit, but this was still worth it to me. I looked at it on both ends and I saw that I can still play this. So I ended up sticking with the 15-minute orb. With the end of day orb, that's at 1:30 Central Time. That's a 10-minute orb. So if you look at this, this is based on two 5-minute candles here, right at 1:30. So here's the first one, here's the second one. This is actually a 15-minute orb. And if you want, you can always play a 30-minute orb as well. Let's see. This is 15 would be like down here. And then if you wanted to play like an hourly orb, which you can, that'd be at like, it's probably too late. The reason why I start my orb at 1:30 is because I want the orb to establish its time frame first. And then once it establishes, I can start looking for moves out. And usually the moves occur around like 1:45, 2 o'clock. You can see how it's already making the move up here. And usually the first move is pretty weak. I usually don't put too much money into it on this first move. Um, I'll put a much smaller amount than I would say like a move over here. And in terms of entry and exits, I'm looking at a breakout on the 3, and I'm looking at a breakout on the 15-minute, but I do look at longer stuff as well. So here you can see, if you look at this orb on Friday, based off the 30-minute here, right, you can see how it plays a lot off this level. So that tells me that because it came back down to the orb so many times, this is actually a much longer breakout here. And you can see here, this is actually an hourly breakout, a retest back to the orb, and then another breakout for a steady move up, right? So this, sorry, that's messy, but this longer time frame breakout is really what I want because this just gives me a bigger move up. So anytime you're questioning why it's touching the orb so many times, look out to the time frames. And once you establish that it's an hourly orb, and then you get in down here, you're going to catch a pretty big percentage. And you can see how that kind of happened all the week as well. I missed this one here on Thursday because I was playing Amazon, but this was an easy breakout in the orb. This one actually didn't give you a chance for a retest. Usually we look for a breakout retest to enter. This one just broke out and just kept going. Like your best entry was here. And if you miss that, then, for me, if I miss it, it's whatever. I'll wait for the next play. But this was a very easy orb on Thursday to get into. I just happened to be playing Amazon at the same exact time, and I missed my entry by half a second, and then I just never jumped back into it. I was waiting for a retest. It never happened. So it just kind of ran. But normally, if I'm playing orb, I'm looking for a 3-minute break. See how we get broke on multiple times. We have multiple retests here, so you have to look out. So this was like end of day Thursday. You can see here how I was actually looking for downside on Thursday here. I was looking for some type of move down. But once this established above the orb, I switched my whole theory and just went with calls here, just because of how strong it was in the day. You can see on the 5-minute here, like we got the breakout and retest multiple times here. So this was actually a longer time frame breakout. So here you have like a 15-minute breakout, you get a retest, and it goes higher. It's actually a longer time frame than that. Unfortunately, it doesn't even. It runs out of time, is what happens here. This would have been like a 30-minute hourly breakout, but we ran out of time here. You can see how it continues over here into the next day. So longer time frame is great, but you have to look at where you are according to like where you are in the day, right? If it's already late, you want to just play what you can off of it and cut profits very quickly. So here you can see like this is like a 15, 30-minute breakout on the orb that actually pushes much higher later on. It just runs out of time. You can see this week I was playing a lot of like 30-minute type breakouts. I was constantly looking for some type of breakout on longer time frames. Like here on Tuesday, right? We had that dip. We didn't have much of a dip on the downside, but you can see how we broke out here, we retested, and then we just end up moving higher on the day. Let's see. So first 15-minute orb. Why does this guy keep moving out? Why does that infinite guy keep moving out? Okay, stay here, infinite. Don't move. So yeah, first 15-minute orb on the beginning of the day, and the second orb is 10 minutes starting at 1:30 Central Time. Tap out of profits. I mean, you kind of have to look at the price action on where to cut, and I'm looking at specific levels off the orb here. So like once it breaks down on a certain area, I'm looking at certain areas of support and resistance where there's concentrations of buyers and sellers in order to know where certain points are. It's like here, like there was too much resistance in this area for us to keep going higher past 6,600. So that was the area where I needed to sell out on the call side. How I evaded the set of 5-minute MACD fakeouts in the beginning of the day and you were showing early. Yes, you can use Orb TTF on anything. 5-minute signals, it works on anything. I used to trade futures with it, and my win rate was about 89%. No, Orb is from start of market, first 15 minutes. End of day Orb is from 1:30. It's a 10-minute orb, Central Time. How can you be confident in a retest going up instead of re-entering in the orb? Just looking at price action. Look at the timing. The timing matters. If you're looking for an entry here, I kind of look at what time the candle is closing. So if it's closing on like a 3-minute, and then there's still plenty of time in the 5-minute, not really looking for that. Usually I want it to break out when the candles are just forming. So once I already have a breakout established and it's already retesting, that is when you want to get in. And you really want it to time as best as possible where you have like a full 3 minutes to break out, or you have a full 5 minutes to break out, right? You don't want to have a breakout and then the retest candle starts immediately and you're selling down to here, right? You want as much time as possible on the upside or the downside, whichever side of the orb you're playing, to take advantage of it. Sorry, someone asked something before. So MACD, how I evaded it. I mean, once the 5-minute shows, the 5-minute signal shows, and it reverses the other way, that's how you stay out of it for flex. Or sorry, for J. Yeah, it's difficult to do anything without learning price action. That's why I gave you the books. You can take the course. There's a video course online as well. Anything I play is zero DTE, close strike as possible, closer to $100 as possible. What do you use to look at price action? That is too general of a question. You need to read the books. But just look at like general price action stuff. Look for like big wicks. So like here, right here, right? This is showing you this is a very bullish candle here with this wick. I mean, you can see continuation. Um, you know, you want to see you can look at the wicks a lot of times to see like where to enter. You can look for, just off like the 1 minute, look for engulfing candles. These will tell you a lot on what to expect coming up, right? Like this candle here is very bearish, like it sold off halfway, even though it pushed up a little higher. I took an entry here on this orb, um, but with very little size. I took like 2 contracts here just in case it kept going up higher. And because it didn't, right, I sold these off very quickly for like only lost like 12-15% at most. Um, but then everything else, right, you get engulfing candles, and it just starts breaking down. You can just kind of follow it there. Yeah, volume matters as well. I'll look at level 2 on Thinkorswim. You can look at maybe this volumatic indicator. These numbers on the volumatic is based off of supposedly this volume here. So these little volume bars, this is giving you out like an actual printout of what those bars are saying. So you can follow this. I'm not quite sure how accurate it is, but from the code, it's following this volume bar. So, I mean, as long as you think this is accurate, this is accurate. This is called volumatic vidya. I use it sometimes. I'd rather look at level 2 though. I'm not teaching level 2 stuff either. I'm not even sure if I'm good enough to teach level 2. Is there a big difference between Thinkorswim and Schwab? Thinkorswim is Schwab. Schwab bought Thinkorswim. Right. Anything else in terms of strategy here? If not, then we'll continue with long term and penny poppers, and then we'll take more questions if you guys need time to think about what you want to ask. I don't use all of Albrook's stuff. I use majority of it. I don't even like his terminology. I don't really use it when I'm trying to explain stuff on live. But for the most part, his principles are very correct. Yeah, I don't like the bar counting. I think it's too much work. I don't want to be that specific. But a general sense of price action based on Albrook's principles is all you need. Do you go for orb for pre-market? No. Pre-market doesn't matter for orb because the movements in pre-market are exaggerated. You want to know what the resistance line are? You can't handle the resistance lines. Maybe one day. One day I will tell you guys.
Support and resistance is mostly just from former price action.
No, they're talking about this thing I did on live. Where is it?
Oh, when you predicted the movement?
Yeah, when I was predicting where it was like cutting in and out. I don't remember where it was. It's somewhere back here. Oh, here it is. Here it is. This was whenever I was drawing lines out for like exactly where price was gonna go a couple of different times. Yeah, one day I'll tell you guys what I did there. No, it has nothing to do with quantitative analysis. It's very simple though. All right, anything else? If not, Ben's gonna pick up on penny poppers and long-term buying. All right, why don't you go ahead? Do you need the screen?
Yeah, I'm gonna put the screen up.
Perfect.
Yeah, quick long-term stuff, guys. Quick penny popper and long-term be 30 minutes.
Tell us about AI, Ben.
All right, so my entire long-term investing strategy is certainly based on sector specific stocks. So AI, obviously, energy, et cetera, et cetera, et cetera. The big thing about long-term investing, everyone always asks, is when do you buy it? When do you get in? How do you know when to buy? How do you know when it's safe, et cetera? The only real strategy that I have with long-term buying is buying and adding over time hold on. is whole buying over time at strategic levels. So what is a strategic level to me? Um, yeah, can everyone hear me? Someone said they can't hear. XCAS. Okay, so it's really just identifying good stocks and then waiting for them to be in a buy area, which is the simplest thing ever. The only thing I really use is support and resistance, which is based on prior action, and then RSI. So for me, I've noticed this over time. On high quality names, daily RSI and former price resistance is the number one and two things you have to watch. So for instance, anytime a stock like Nvidia and any of the Mag 7 gets daily oversold at a resistance level, I'm automatically buying it. I don't care what's going on in the world. I'm at the very minimum, I'm starting to buy it. So when we had the tariff situation going on, right? And Trump was saying all this crazy shit and the market was tanking and whatnot, I was like, okay, well, I have the names that I want to buy. I know every name that I want to buy, all this AI stuff, all these chip names, all the Mag 7. So all I'm gonna do is wait for them to get to daily RSI oversold and some type of support, and then I'm going to start buying. I don't care if the news is telling me the market's over, or every economist Trump's destroying the economy. I don't listen to any of that shit. All I do is I have a list of names that I want to buy, and I look at the charts at the end of the day, and it'll tell me how close I am to adding to it and if I should continue to add to it. So for instance, this downturn right here was the tariff situation. This is Microsoft. So when Trump started announcing tariffs early in the year and we had the massive tariff sell off, look what was happening with Microsoft. This is the daily chart, daily RSI. So if you would have bought Microsoft at daily RSI oversold, look what happened now. So I took a chunk of buying over here, daily oversold, and then I took another chunk of buying, same strategy we employ with TTF. Attempt one was over here, but these attempts you hold. So this isn't like, well, attempt one on Microsoft long term didn't work out, I'm going to sell those shares. No, that just means I didn't get the most bottom entry. I got a good entry, but I didn't get the most bottom of bottom entries. So if I buy $10,000 worth of Microsoft over here, and then it's daily oversold, and then we go up, and then we go back down to a new daily oversold, I'll put in another 10,000 over here, and so on and so forth until eventually Microsoft turns around. So like if Microsoft did this, what tool should I use here? So Microsoft did something like this, it bounced here, and then this over here continued to go down like that, I would have bought more Microsoft because Microsoft would have been over here and the RSI would have been over here. So I would have just kept buying more and buying and buying and buying and buying until eventually Microsoft would have been oversold and it would have done exactly what it did now, just from a lower level. But for me, I bought some over here. I bought some over here, which is the exact bottom, which lined up with the daily oversold. And Microsoft is now up $140 or $180 from my initial buy back in the tariff dip. I'm up huge on Microsoft. Now let's go to another one that everyone loves. Let's go to Google, right? So Google, tariff dip, Trump saying a bunch of bullshit, market's tanking, world is ending. Everyone's telling you, every pundit you talk to or hear on the news is telling you the world's over, stop buying stocks. Well, Google's daily oversold right around here. I'll buy some over here. Daily oversold again. Buy some here. Daily oversold again. Buy some here. And now look at Google. So as long as you're DCAing, dollar cost averaging, and getting decent prices at any point in the future, as long as the market comes back, everything you've bought down here is fine. Now I'm up on the lowest shares. I'm up $100 on Google. Look at where Google's at now. And you can extrapolate this to any time in the history of the market. Google was overbought oversold over here daily. One, two, three separate ads. Half a year later, Google was way higher. We got the tariff dip, which sent you back down below your other buys over there, but it doesn't matter. So you just add more. And this is up to whatever size you want. I mean, it doesn't have to be $10,000 per buy. It could be $500 per buy. Eventually, the market's going to turn back around. Look at Google over here, right? Daily oversold, nice move up. Daily oversold, nice move up. This happens with every single high quality name. Every single name. Anyone want to put a name in chat, put it in there and we'll look at it. Okay, let's look at NVIDIA. Daily oversold, big rip up. And NVIDIA doesn't get daily oversold often because it's NVIDIA, right? So NVIDIA was daily oversold August 24th, August 5th, 24. It didn't get oversold daily again until April of 25. So almost like 8, 9 months. But look what happened when NVIDIA got daily oversold. We had a little bit over here, a little bit over here. I have shares of NVIDIA in the 90s because we were daily oversold. I was buying all down over here and look at NVIDIA now. Let's look at Amazon. Right? Daily oversold in this whole area. Daily oversold in this whole area. Look at Amazon now. Crazy. Tesla. Daily oversold. That's an early buy, but still significantly off the top. Didn't get daily oversold again until here, and then again on here. So you would have had shares of Tesla all in the 250s. It's now almost $400. And I will not buy any of these again until they get daily oversold. Now they're all daily overbought. So that's why I've been anticipating a market drop. Has it happened yet? No. But eventually it will, and eventually I'll buy more. Every single stock. Palantir, right? When was the last time Palantir was daily oversold? This thing's a sick freak. Look at the last daily oversold for Palantir. Are you kidding me? That was the last time it was daily oversold. If you would have bought over there. When was the last time before that? And look at that move. Look at when was the last time before that? I mean, this is all it's the difference is these are high quality names. This might not happen with like bullshit stocks, but any high quality name you guys can think of, anything Mag 7, anything AI, Oracle. Let's look at Oracle. Right? Daily oversold. Daily oversold. Look at this shit. Oracle's up like almost 200% from the last daily oversold. I mean, it's just ridiculous. Any other names? What's one of the Mag 7 we haven't looked at yet? We did NVIDIA, we did Amazon, we did Google, we did Microsoft, Meta. Daily oversold. Daily oversold. You buy here a little bit over here. You buy more down here on the next daily oversold. Free money. Apple. Daily oversold. Daily oversold. Daily oversold. So it doesn't necessarily mean, just like TTF, it doesn't mean the first buy you ever do, it's never going to go lower. But if you're adding over time and I increase the size, eventually it turns around. And it never in history has it not. The market always goes higher. So all I do is, let's say, uh, Apple had daily oversold over here. This is the first daily oversold we've seen in a while. So I'll put in, and again, adjust these numbers in your own head. I'll throw in $5,000 over here. Okay, it goes up. I'm thinking I made a great decision. Well, guess what? Something else happens in the market. It goes down. Okay, we're daily oversold again. So I put 5 in over here. I'll put another 5 in over here. It starts to go up again. Oh, hey, maybe that was the absolute bottom and Apple's going to go on another bull run. Well, no, something else happened. Okay, no big deal. Daily oversold again. I'll put in 10,000 here because I've already put 5 and 5. You put in 10 over here, and now it's above all the buys combined. I'm green on everything. And I've done this. No. So it depends what your outlook and your own mindset of quote unquote investing is. If you want to put, shares in something, or you want to do a leap, but you want to eventually sell that leap or eventually sell those shares, that's up to you. For me specifically, the AI names and the really good names, this is long-term, lifelong accumulation. I have shares of all of these things like hundreds of percent lower. I'm up multiple 100% on all the Mag 7, Microsoft, Nvidia, you name it, I own it. And it's all because all I do is every time the market panics and you have daily oversold, I throw in a little chunk. We get daily oversold again, I throw in another little chunk. We get daily oversold again, I throw in a bigger chunk. Eventually it turns around. It has never not done it. That's what I don't understand about people that are a little bit worried about long-term investing in the context of a quote unquote market crash, because every single time in the history of the stock market, every single crash has recovered ever. So there's no reason, if you have a little bit of free money laying around, and I don't care what that a size is. I started doing this like 8 or 9 years ago, and that's how a lot of my money has been built up into bigger money. If I had said, "Well, I don't, it's too late. The market's already so high. I'm not going to start investing. I'm just going to do day trading," I would not have Microsoft at 80, Nvidia at 50, and Meta. I wouldn't have any of that because I would have said, "Oh, well, the market's already at all-time high. Screw it." Anytime the market offers you an opportunity of buying, especially good names, just throw something in. I don't care what it is. Just throw something in. Look at the nuclear names, right? So let's look at LEU. Look at this shit, guys. Come on. Just daily oversold. It's not even like something where you have to be like, well, I have to analyze this and analyze that, and what's the flow, and what's this candle doing, and what's the support, and blah, blah, blah. Daily oversold is the safest time that I've been using for the last 8 years to just throw something on a stock that you like. And if it goes even lower, you throw a little bit more. But all it does is good. Marcel, the only names I do this with are high quality names, like really good names. Anything that's in a sector that's hot, like energy or AI or Mag 7 or a name that everyone knows, like any name, basically any name that anyone knows that everyone talks about is safe to do with this strategy. And it could be literally any name. I like to specifically invest in certain sectors because I'm very heavy AI, and I think AI is huge. Tech, AI, energy, etc. I mean, I talk about it every day, but there's not a single stock that anyone can name that's a well-known stock in a good, solid sector that this strategy has not worked on from an investing perspective. Does it mean that I'm always like we saw those other charts? Does it mean every daily RSI is the absolute low? No. But what it does mean, if you dollar cost average on daily RSI, it's nearly impossible in the longer term for those buys not to eventually be in the green. It just doesn't happen. Everything I've bought in my portfolio on daily RSI on a good quality name right now is green. everything. Not a single share that I own on any of the stocks that I bought in the tariff dip and the COVID dip and the whatever dip is red. Everything's green. And then
Just look at how SPY is designed. Like they boot out the worst companies. They keep re-adding good companies. The market's only designed to go up.
yeah, let's exactly. Let's look at it on an index level. It works on an index level too, right? Daily oversold. Daily oversold. Look where the market is now. Daily oversold. Look where the market went after that one. Daily oversold. Look where the market went after that one. So you had 3 opportunities here. Daily oversold, daily oversold, daily oversold. Look where the market went after that one. In the history of the market, this strategy almost never fails. This is the daily. This is the daily time frame. Daily oversold. So if you want to do this on a shorter term time frame, you can do like a trade where like we're daily oversold, and you want to like take calls that are like 2 or 3 weeks out to catch like, for instance, if we're in a quote unquote bear market, like we had a bear market in 22 when all that inflation was up to like 9%, and look, the market went down for a year. So if you were doing daily oversold, you did have to wait a while to make money on it, because you would have added shares here, the market went lower. You would have added shares here, market went lower, et cetera, et cetera, et cetera. Eventually, you did catch the bottom if you continued to add and you continued to add, just like TTF. And now the market is way higher than this area. That's why I do it in a longer term time frame, because it doesn't really matter if these initial buys work out. If you continue to add as the market goes lower, eventually the market will turn around. And I just use daily oversold as a good area to start buying and investing in stocks. And if it continues to go lower, who cares? You're getting better prices, because eventually the market will go back up. And in the history of humanity, it has not failed. Like this was the COVID drop, right? So look, let's say you were buying some shares of things on the COVID daily. You would have started over here. Yes, the market went zoom in. The market went significantly lower, but who cares? Daily oversold here, here, over here. Guess what? A month later, everything you bought was green. Like all of this was green. And then what? 2 months later, your highest buy was green, and then you went on a multi-year bull run. Someone cannot point a single instance in the history where if you buy good quality stocks and invest on indexes where daily RSI has not then eventually gone higher. It literally hasn't happened. So that's my long-term investing philosophy. It's worked out really well for me. I have tons of shares of things that are now worth way more than when I bought them, and I just continue to hold them. I don't have to think about it. If ever we go to another daily RSI oversold situation, simply I will buy more. That's it. There's no thinking. There's no should I sell. There's no, what should I do if this is happening, or the news is telling me this shit. All I'm saying is, are we daily RSI on a good name? Check. I'm buying. You buy a chunk, you wait for either it to go back up, or you wait for it to make a new low at daily RSI oversold, and you simply buy more. That's it. That's all you have to worry about. No, I don't do options selling. I just haven't really looked into it. So we'll have this class able to be downloaded. Don't worry. So yeah, so that's really it as far as long-term investing goes. Really simple, really easy, not a difficult strategy. And if you have the money to dollar cost average, do it. That's as simple as it gets there. All right, quick penny popper. I don't even. What are some that hit? Okay, so penny popper. All right, this is the best chart that I've ever found for penny popper. This is as simple as it gets, right? This stock has a stupid history of doing this for no apparent reason. Massive pop, massive drop. Massive pop, massive drop. Massive pop, massive drop. And it does it every like 4 or 5 months for some reason. Who knows? Who cares? I don't even know what this company does. I don't know what this company is. I don't know when they're putting out news. Who cares? All I need to know is that this stock has a history of repeated, frequent pops and drops. And I've played this one like multiple times because all it does is the same exact shit over and over. 300% here, 200% here, 150% there, 80% there, 80% there. And it just, you buy it, you wait for it to go daily oversold, same shit as everything else, big pop. You sell it, you wait for it to go daily oversold, pop. Sell it, wait for it to go daily oversold, pops. That's all it is. That's all penny poppers are. Some of them may never pop. Some of them may be delisted. Some of them may be who knows what. I don't even know what these companies are. I don't know what they do. All I know is they have a repeatable pattern on the chart that always works. That's it. So penny poppers are like little bonuses. I have like $100 or $200 in something off to the side that I forget about, and one day I wake up and it's up to 300%, and then you sell it, and that's it. Nothing to it. So that's the long-term strategy, and that's the penny popper strategy. They're both easy, not a lot of thought goes into it, and either they hit or they don't. The long-term strategy obviously always works. That's the one strategy that does legitimately have a 100% win rate. Every single share of every single long-term stock I own is green. I'm not red on a single.
How do you find the penny poppers?
Penny poppers. So every single day that the market's open, I look at every stock that's up 50% or more, and I add it to a list, and then I'll scan that list every like couple days for whichever ones have sold off the full pop. And then once the full pop has been sold off, I just re-enter it and wait for the next pop. So I have a list of like 800 names of stocks that have gone up over 50% in a single day. And then I'll scan that list and I'll see the ones that are the most oversold and waiting for the next pop. And then you just enter them and wait. And that's literally it. Either they'll eventually go or they won't. And this one has done it over and over and over and over and over. And I'll do it again as soon as this thing sells off this pop here. HCWB was one of on my list, and it hit exactly as expected. Every single penny popper, actually, up until this point, has eventually hit. There's not a single penny popper that I'm currently bag holding, meaning like I'm in and it's down like 90% and it hasn't gone yet, and I don't know what to do with it. Every single one I've ever gotten into has eventually hit, and all I'm holding now are the ones that I'm in that just simply haven't hit yet. As soon as a penny popper pops, you take the profit. I'm not in a penny popper as an investment. If I wake up and a penny popper's up 80 to 100% or 40, 50, whatever, I'm out. I take it. Sometimes you wake up and one is up 300%. Sometimes you wake up and one is up 50%. I don't really care. I'm already scaling out.
And you buy once it hits down on the RSI level, right?
Right. So once the former pop has completely sold off and it's either at a double bottom or a new low and the RSI is oversold, I start accumulating it. That could be with $100 to start, and then it keeps going lower. I'll add another 100. I'll add another 100. I'll add another 100. It's just like a ticking time bomb, and eventually it goes off, and then you make money on it. That's not to say every single one has gone off as soon as you buy it. There's certainly been ones that have taken like 2 or 3 months to pop, and I literally forget that I even have it, or I've had to average down on it a couple times, but eventually, for whatever reason, they go. And yes, it has to have a history of prior pops. I will never buy something with the hope that it does pop simply because it's down so much. It must have a prior history of massive pops. If it doesn't, I will not touch it. DXF was another good one. This one had just went recently. Duo. Duo was a really big one. It's like, look at this thing. So this thing randomly one day, $6 went up to 70. It's 1,000% move. Sold the entire thing off. There's another 100% move here. Actually, more. This was another 400% move. And sold the whole thing off. Just recently, we were in it, and I already sold it, but it was on the list. It went from $1.20 to $5. So this thing went up another 400%. It has a history of doing it. Just look at the history. Here's one, here's one, here's one, here's one, here's one, here's one. Like what? Like how unlucky do I have to be the schmuck that's going to buy this thing that has a history of doing this for 8 years, and I'm buying it the one time it's never going to happen again in the history of the stock? The probability is on my side that eventually it's going to happen again. Will I one day buy one that like maybe it gets delisted or it turns out to be a scam or whatever? Absolutely. Penny stocks get delisted all the time. Thus far, in like the 4 or 5 months I've been doing it, every single one is hit. That's 100% win rate. Same thing with the long-term investing. I've never missed a long-term investment that I've decided to buy.
How have you been filtering them to find the ones that are?
So I add the yeah, so Foxo got delisted after the pop. That flex was just unfortunate that I think you held it through the pop. Again, I don't care. I'm not sitting here analyzing when the pop is done. If the penny popper pops, whether that's 40% or 300%, I'm already scaling out. There is no way to know which penny is going to be the next 1,000% mover. Impossible to tell. So if I get 80% on it or I get 1,000% on it, I don't know. I'm already, as soon as it pops, I'm taking some off. If I have a penny popper and I wake up, it's up 40%, I'm already taking some off. If it ends up going 1,000%, amazing, but I'm not anticipating it. All I care about is that eventually it, from where I'm holding it, it pops. And the pop can be, again, anywhere from 40 to 1,000%. Who cares? That's not why I'm playing it. I'm playing it because it eventually is going to pop. And if I'm in it before the pop, I'll make money on it. How greedy you want to be is up to you. Yeah, pretty much as soon as I wake up, and every day I have my penny poppers on Webull, and I have my stocks listed by how much they're up. So if at any given time a penny popper is up, it's going to be at the top of my list because it's up, 80% or something. So I know right away that it's up, and then I'll just sell it. Oh, so Flex, the lower the price of the stock, the higher the chance of delisting. So Foxo was like 4 cents or something, or like something stupid. So the lower the price of the stock, the higher the chance of eventual delisting, which means that the pop it might run out of time before the pop comes. If a stock is trading at like $1 or above or $2 or whatever, chances are very high that it'll repop before it gets delisted. But the chance of it also going down very low because there's more money for it to go down still is also high. So you have to balance the price is high, so it can still continue to go down with the it's not down low enough yet that it's risking being delisted. A stock at 10 cents or 30 cents or 40 cents, the chance of it being delisted before the pop is way higher than a penny popper that I'm getting in at like $1 or $2. Because they will delist a stock that gets too cheap. They will not keep it listed on a major index if it's like 4 cents. They don't want that shit on the index. I'm gonna run a dog downstairs, Bo. If you want to say anything, and then I'll be back in like 4 minutes, and we can
That's fine. I'll take
wrap
questions
up.
till then. Any questions on strategy, even brokerages, trading view? Do I use shortcuts? Do I use hotkeys? Yes, I use hotkeys. I don't always use hotkeys. Sometimes I'll just do it manually. But I always have my orders already ready. Like even as I'm talking about getting in, I already have the order ready to go. You should always have your orders ready. I've never used TrendSpider. I mean, if it's just as good as TradingView, then great. TradingView is just clearer for me. I just like having it full screen. I will drop my brokerage all the way down into the corner and just look at the option chain. I don't really need to see anything else on my brokerage. All I need to see is my entry and exits into it and what PL percent I'm at, and that's all I'm happy with. You're not telling us about the resistance list because it's too advanced, or you want us to buy more courses? The resistance levels, I mean, if you're talking about that specific day, I mean, you can buy whatever mentorship you want. I'm not going to tell you. I'll tell you guys when I feel like it. But reading the books will help you get there. You can get that for free. So once you call out orb TTF call and SPY is at 655 when you buy 656. Yes, that's right. I'm buying the closest strike. If it's cheap, I'll buy in the money. If it's like closer to the end of the day and it's like $80 for a 655 call, I'm gonna buy this $80 one. Yeah, the books are just super important. Any type of entry and exits that we have, you just have to know how to read price action, or else you're just gonna be kind of blindly guessing. Where do we exit? Where do we enter? How long do we hold? I mean, that's all based on price action. That's why I don't tell you guys where to cut, because that just opens a bag of worms where if I tell you to cut and it keeps running more, you'd be like, why'd you tell me to cut? Like, there's no winning with whatever I say. The less I say, the better it is for me, just because there's always someone complaining. And we'll try to set up a private room for you guys so you can continue asking us questions, because I know it's a lot of information. I don't know if ChatGPT charts correctly. I'm guessing it looks at a lot of good stuff, but it'll only be so accurate to a certain percentage. So for safety, if we get 40% profit, is it better to cut like 70% if we are still earning price action and not fully comfortable? Yeah, you need to cut wherever if you see it and you feel proud of that green number, you cut it. You just take it. You don't need to keep holding stuff. You don't need to shoot for the 100+%. Um, you can if you want. I mean, I have a certain level I'm looking for. I call it on live. I tell you guys I'm looking for this specific level, and once we hit there, I'm either gonna cut there or take another play. And I'm pretty clear about the levels I'm looking at. But yeah, take whatever is getting you money. It is your money. You need to take it. Whatever you're comfortable. If you think it's worth screenshotting, take it.
It's 30 and 70 flex. 30's oversold, 70's overbought.
Yeah, 70 overbought, under 30 oversold.
Correct. Yep.
Fibs? No, I don't use fibs. I don't think you do either, right, Ben?
No, I don't use fibs. Frosty, for the newer AI nuclear names, I mean, those we bought, honestly, we bought them so much lower. Uh, there's just no way for me ever really to go red on them. And I'll look to buy more of them. Same situation. If we get daily oversold, I'm buying the shit out of those things. Like recently, we bought LEU
Mm-hmm.
because LEU was getting close to daily oversold. That's why I bought more of LEU.
Yeah,
And
and it was expensive already, and we still
yeah,
bought it.
yep, and it still went right back up. SMR was daily oversold, so I bought more of that. Pull up SMR here. Like, look at SMR, guys, right? So SMR, good quality, high quality nuclear name, AI related, blah blah blah. Look at what happened. The first time it's been daily oversold in 9 months. No, actually, a year, almost a year, 11 months. September 6th, 2024 was the last official daily oversold. And look what happened. Daily oversold, and I bought shares just because I want more of it. But if you had bought an option on daily oversold SMR for like a month out, look at that move you would have caught. Like massive. So, like the other thing is the less well known and established the name is, the more chance that daily oversold won't necessarily be the ultimate bottom. So, like for a name like SMR, which is like a small cap nuclear name, I'm not going to throw like $10,000 on the first daily oversold. I bought like an extra 5,000 worth here, and if it is to go much lower and it gets daily oversold down here, I'll throw another five. And if it gets daily oversold again, I'll throw another five. Versus like Microsoft or Nvidia, where as soon as Microsoft or Nvidia are daily oversold, I'm already throwing 10 grand on those. And if it continues to go down, I'll keep throwing more and more and more. There's just there's no way I'm ever gonna own more of those names than I want, because they're just the best names on the planet. SMR, for whatever reason, can come out with a report when in the next year or two, that like their nuclear technology isn't as good as they thought, and blah blah blah, and it can go to zero because it's a relatively unknown nuclear name, but it's positioned well enough that I'm willing to take that risk and buy more. So the name you're looking at does matter, as far as how much and how quickly you want to buy it. Like LEU, I bought a good amount of because LEU is one of the more safe names, and LEU never even got officially daily oversold yet. I was still buying it because LEU is a little bit of a higher quality name than SMR. Like
Yeah, they got a moat.
If LEU had made it all the way down to daily oversold, like this general area or even on the 200, I would have had like probably $50,000 or more eventually in LEU if we had made it all the way down to like somewhere like this area with daily oversold. But we didn't even get daily oversold once, and it already popped all the way back up. So we were buying some all in this area with the anticipation that I'm willing to buy it all the way down to here if it got there. It just never did.
Jay asked, would you buy daily oversold stocks at the end of the day or aftermarket?
So typically speaking, like daily oversold is going to pop up on the screen at the end of a day where like the market had a big down day or an individual stock had a big down day. It's If you're looking longer term, it's not like, oh my god, I have to buy the share right now because the market's going to open tomorrow and this thing is daily oversold. It's going to be up 10%. No, that's not the case. If a stock is daily oversold, you can just start buying it. It's not going to go up 20% tomorrow. It might start trending upwards, but as long as you notice that it's daily oversold, you can start to average into it. I'm not expecting a daily oversold name to go up 10% in the next week. I'm expecting it to go up 10 to 20% in the next couple months. But again, it's a long-term hold. These are things that I'm adding to my portfolio to build wealth over time because I'm 35 years old and I'm going to be in the market for the next 30 years. And these things will all be up thousands of percent from now because I'm averaging into them over the course of years at strategic times. But there's other people who I know that, oh, the market's already so high, I don't know when to buy. And then the dip comes and they don't buy. And I'm like, you don't want to buy at all time high because it's all time high, but then you don't want to buy it when it's dipping because it's dipping. So like, I don't know what you're doing. So as far as just wrapping your head around when can I start investing and buying high quality stocks, just use the daily RSI. There's nothing else. There's nothing else that you're going to do mentally or physically that is going to get you more ready to buy something if you're already opposed to it or you're nervous about it. So you just have to choose a point to eventually do it. And for me, that's daily RSI. Or you can never invest in the market and just do day trading. That's also an opportunity or an option if you don't like long-term investing. But I will tell you, when you catch a good bottom on very high quality names, you can make just as much, if not more money than day trading because you're able to put in, if you have savings, larger portions of money that is a relatively safer investment. Like I'm never throwing, unless I'm on a temp 7, I'm never throwing ten to $20,000 on ODTs, but I'm absolutely willing to throw $10 or $20,000 on a daily oversold Nvidia that could be up 50% in 2 months and make 20 grand on that. That's easy because it's Nvidia. It's the thing is going to go back up. Everyone wants to buy these things. Not only that, it could keep going up forever. So who knows? And if it doesn't and it goes back down, you just buy more. So like while I'm saving money, like I bought the bottom of the tariff dip. I haven't sold any of that. I'm making income through my business. I'm making income by trading. I'm saving that income. And the next big market thing that happens where the market gets daily oversold, all that money I've been accumulating in between the last daily oversold, I will then start to deploy on the next daily oversold. And I just repeat that process for the rest of my life. I mean, who knows, what that means. Eventually, could there be a catastrophic situation where the market never recovers? But then it's like if the market falls, 80%, it never recovers, and global financial markets destroyed, and yada yada yada. Like money doesn't mean anything at that point anyway. Like something has gone so badly wrong that like I'm not going to be worried about what my Microsoft shares are at. I'm going to be worried about, am I like getting enough food to eat? Am I surviving? Because that's the only two options. Either things will continue to go normally and the market goes up, or something so catastrophic happens and the market never goes back up again, and money doesn't matter at that point anyway. So you might as well just invest. Yeah, we're getting close to 7 o'clock. We estimated about 3 hours. So yeah, if anyone has any final questions, feel free to shoot those out. And I think we covered pretty much everything we possibly could.
Yeah, we'll try to get you guys a section that you guys can ask more questions as you think of it or as you're trading.
And whoever recorded that, we gotta get in touch with them.
Yeah, Papacito.
Okay, we'll get in touch with you after. And thanks for doing that. Yeah, I think you can cut it off here.
You can stop. You can stop.